best crypto asset? Bitcoin's the best crypto asset. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best? 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 What's the second best?
This is Discover Crypto, your one-stop spot for all things crypto-related. I'm here with TJ on a very special Friday episode. We got to talk about the Trump tariffs and the China escalation and the retaliation and how the markets are feeling. And they're not feeling too good about that, folks. We're going to talk about altcoins, major news for XRP, major news for Cardano. Even Solana got an ETF application today. And we're going to look at the Bitcoin charts and maybe even reveal a couple hot stocks to watch, everybody, because they just lost some major support or are at it right now. And TJ, how are you feeling today? It is the weekend.
Yeah. Yeah, it is. It's feeling good. Almost the weekend. I see Carlson in here saying TJ Adam to $1,000. Adam is one of the top pumpers today. I don't know about $1,000, but it's almost back to where I bought it in 2020.
There you go.
Huh?
There you go.
Yeah. No, feeling good. It's been a good time for markets, good time for buying. I'm actually feeling pretty good about things generally. Curious to hear how you guys are feeling. Are you buying today? Are you panic selling today? What do you think about what's going on? We've got a lot to cover. We're going to be doing an extended stream today. Josh is going to be joining us a little bit later, so that way he can take us all the way through Jerome Powell's speech.
Jerome Powell.
That's right. And then we've also got, we had unemployment numbers coming out. We've got crazy stuff going on with the trade wars and the tariffs and all that sort of stuff. I'm sure we'll get into that. I've got a lot of thoughts, a lot of opinions, but happy to see all you guys today. Happy to see all of our members, Nirvana, Dylan, Mr. Mark, and many Shortcoin, many more. Nirvana.
And we're going to be doing some DZ member stream activities later on the normal stream, so you get to get a little bit of an insight on what we talk about in the closed door sessions. But folks, there's a lot of insane stuff. We got TJ running around the studio. I don't know what's going on here. There he goes. Well, you're wondering how are things going? Well, in December, we were feeling good. We were feeling like Lambos. Then maybe we had a downgrade to just a normal truck. Then we had a downgrade again. Will we have to keep downgrading? Am I going to have to start walking around in flip-flops? I might have to sell the Tesla, everybody. Just the way the market's been going here. But here's the latest news from China and Trump. He just posted again this morning. This is just TJ. What did he post this about 45 minutes ago?
That sounds about right.
9:52. I know you were pretty close with getting this comment out or this post out. Trump says China is panicked. Will things reverse soon? Folks, if you're not following our new X account, make sure you go follow that. It's Disco Crypto Live. But China played it wrong. They panicked. The one thing they cannot afford to do. And so the escalation continues. And I just saw a Martini guy throw out a very bearish thought, TJ. You know what that was?
What's that?
We haven't seen the EU retaliation yet, and the day is still young.
That's true. Yeah, and they work together a lot of times in tandem. So there's a couple. There was another thing that was a little scary to me. I don't know if you saw this. Let's see if I boop.
Bing bong boom. There we go.
Bing bong boom. Just in, retail investors bought 4.7 billion in stocks yesterday, the most in decades. So either it's the smartest, retail's getting smarter, and they're all Discover Crypto viewers, and that's why they're doing it, because we've been screaming like this is a buying opportunity. This is a buying opportunity. But it's also like usually retail doesn't buy the bottom. So what do you think? Is retail getting smarter? Is this the crowd that saw the 2008 crash and didn't get a chance to take advantage, and now they're kind of wising up to the game as blood in the streets is the time to buy? Or is this something to be worried about? What do you think?
I think that is a good point. I think after, Davey goes live with Dave Portnoy and, seeing what with GameStop meme stocks and, what was that movie called again?
Dumb Money.
Dumb Money. I think a lot of people have just a lot more awareness of dips are buying opportunities. And I think more people understand that now than they ever did in the March 2020 crash or in the 2008 financial crisis. A lot of people didn't even have the term dry powder on the sidelines. I don't even know what you mean. And now a lot more people are just financially sophisticated. And here's your take. This is the most terrifying news I have seen recently. So, folks, what do you think? Is this terrifying or is this fantastic news? I'm I think, that is a good thesis. Like maybe retail is a little bit more sophisticated than they were in March 2020, or they saw charts or Bitcoin, or they saw, an asset that they may be a fan of. Wow, why didn't I buy in March 20? Maybe this is my March 20.
Mhm.
So maybe they're deploying that capital in a smart way.
I think so too. I think you're right. I think dumb money retail isn't quite so dumb anymore. And with the flow of information, not saying they're sophisticated, they're not as diamond hands as a BlackRock. I'm not saying BlackRock and the major hedge funds aren't going to win a lot of these overall trades over time. But I think retail investors are smarter or way smarter today than they have been in the
I've
past. So
seen so China retaliated. We're waiting for Europe to retaliate. Have you seen the latest Trump retaliation from this morning?
I don't think so.
Announced a new slate of import tariffs here, and now we have Narnia is going to be Middle Earth. We have Hogwarts. Mordor gets the 0%. I don't know how I feel about that one, but Westeros with the 25%. That Lannister gold, we got to pay that a little import tax, and Wakanda. That's the one we should have the low ones at, and Asgard. Get Asgard. Shout out to all the Thors in the chat. But looking at Bitcoin here in a more serious manner, this is the 1 minute chart. Let's go to the 5 minute chart. You see, we're coming down and potentially testing the lows that we pointed out. Let's see. Was this roughly 24 hours ago? This is 1 day and 45 minutes. So 24 hours ago is this point right here. So literally live yesterday. Literally right here. We drew this out. I can't remember what time frame I was drawing the circle on there, but we drew out the bullish divergence forming on some of these smaller time frames. I think if you recall, we were seeing, all right, it rolls into the 10 minute. Looks like it's rolling into the 20 minute. Is it going to roll into the 30 minute? We were pointing this out, and yes, we got those trades in. TJ, that Pepe short or the Pepe long at 50x, this far away from not getting liquidated and just would have gone on a huge run. Pepe did an 8% gain. So 50 times 8, that would have been a 400% gain there. But looking at the trades that we did open yesterday, remember we opened the Cardano trade. Let's click on the Cardano trade here. It's the 15-minute chart. We opened this basically live, or maybe right before we went live, and we may have caught a little bit of a bottom there. 23 hour, yeah. So literally 24 hours ago to the dot, we jumped in on this trade. We are in profit. We have closed a lot of this profit, and I posted this trade for everybody, trying to share basically the alpha out there, that there's a lot of liquidations that were wiped out on Cardano, and we were longing from 62 cents and talking about closing the partials there. So if you're in some profitable trades, do not be afraid to peel off the profit, folks. You don't go broke taking profit. Now, moving forward to what we're seeing here is from Rapid Response.
I just want to hit this super chat real quick. $10 super chat from Kelly Kellum, BitLab Academy, one of our team members here. Love that guy. He says, everyone hit the like button. We should all be grateful to have these Bitcoin and crypto dip buy opportunities when the landscape has grown so bullish. Looking forward, stacking season. And I agree. And there's a mixed sentiment somewhat, because I do want to acknowledge this. I want to know who out there is feeling the pain a little bit. I want to know who is nervous and who is actually looking at this as an opportunity. So say nervous or opportunity in the chat, if depending on where you fall. Because
I bought a little bit of an altcoin this morning, TJ.
Oh, nice. What'd you get?
Bought a little bit. I almost want to throw out the TA here, because let's see, what time is it now? It's about 10:40. I did it roughly closer to 6:30 than maybe 7:30, but we'll just go back about 3.5 hours. Bought Aave about 3.5 hours ago. So I kind of want to measure that. So if we jumped in 3.5 hours, we got in right here and maybe got in pretty close to buying the dip. I don't know if I got that 1 5-minute candle that ripped to the downside, but I remember seeing a lot of red candles. I said, all right, you know what? Time to deploy a little bit more into Aave. Aave now down $147. I can't help but see a little bit of opportunity here. Go to the 1 hour. Are we seeing the bull divs? Yeah, we're definitely seeing some bullish divergences on the 1 hour time frame. So maybe a good time to get some Aave here. At least that's what I think. Let's hit refresh on Market Watch. See how your altcoins are doing. XRP. TJ, look at that XRP pump. Are you excited to talk about XRP again?
Yeah, I see it in the rundown today. I was telling him I wasn't. Oh wait, no, it's XRP 73% pump. Yeah, that sounds interesting.
All right, we're almost 10% of the way there. So we're going to talk about why can XRP pump 73%. Solana with the nice 3.2% pump. Dogecoin with the 6.6. And you know what video we put out last night, TJ?
What's that?
It was HBAR, and if you look at HBAR, one of the biggest gainers as well, smoking all the competition nearby. HBAR with the 5% pump. So, folks, if you're not just catching the live streams, you're missing all the uploads. make sure you catch the uploads. It's where we can dive in into particular altcoins or maybe 4-year cycle theories, or maybe even how to, exit strategies or entry strategies. So make sure you turn on those notifications, everybody, and smash the like button while you're at it. Helps us get into your algorithm. Where are we on the likes? Do you happen to know?
Let's see. Likes. Yeah, only 200 right now. People getting rolled in, 1,500 people watching. So if you could, should be an easy, we know, guys know the checkpoints. We start at 420, then we go to 690, and then eventually we end up over 1,000. But if you guys could take a second, stop what you're doing. If you're watching on mobile, sometimes you have to exit the live chat, hit it, come back in. I do see the super chat here from the Izzy. This is just our Black Swan event for the cycle. I wouldn't call this a Black Swan. Again, we talked about this the other day. I think that term gets overused.
Did you give it gray?
Sure, you make up if you want to make up a new color or something else, but this has been somewhat priced in. This has been talked about since before Trump even took office, that this stuff was going to be coming. So a Black Swan is something completely unexpected. It'd be like if a volcano erupted and like half the world fell into it. That would be a Black Swan, and this is nothing like that. COVID, I would say, was truly a Black Swan.
A damn pangolin in that wet market. Looking at the top gainers in the market cap here, you look at Cosmos. That's what TJ was alluding to earlier. Hugest pumper. Sonic with the nice 10% pump. Pepe, which we tried to 50x the bottom. We were all along with it. We knew it probably wasn't going to hit, but TJ, I swear to you, we were so close. I mean, to the fraction of a fraction of a fraction of a penny. Almost caught that knife at the perfect spot. That would have been a huge pump, but we end up missing out on that one. Algorand, the 8.8% pump there. Jupiter, nice 6.8% pump. Caspa, I haven't seen bullishness on Caspa, but when I'm looking at this chart, TJ, I just can't help but notice the 7-day is a sea of red. I do see Cosmos in the green here. If we're looking legacy coins, Dino coins, the older coins are the pumpers here. After that, it is stable coins, Tron, Atom, and EOS. All of these, I mean, some of these tokens pushing a decade. So yeah, all these tokens here, were they all here 2017 cycle?
EOS, no, Cosmos came out after that, towards the end, more like towards 20, probably launched in 2019, but I bought it in 2020 is when I remember it. But Tron definitely was. EOS definitely was. Well, I'm losing what else was on there. When is it?
EOS Atom. All right. So 2017. So, kind of jumped in a little bit. You can see the run up for Bitcoin as Bitcoin ended up topping out. Was it December of that year? And if we go back to, was it the 7-day here? Atom, let's click on Atom. Let's hit max. Yep, you're right on the money there. 2019 launched in February, but then had a nice little run up in 2021. I mean, this token's showing signs of life. Do you still hold at them?
Yeah, I've held it all the way. All the way from I bought it. I think that's the dip right there. If you kind of see that dip halfway through the beginning, that's March 2020.
Trying to scroll through the chat there.
And I bought it around that time. Rode it all the way up. Rode it all the way back down. I'll probably ride it all the way up again. Good tech. A lot of good, it's helped a lot when it comes to interoperability. But you got to take profits, guys. It's not all about riding tech up and down. But one thing I noticed that was interesting when I'm looking at coin market cap, when I checked the 24-hour, it's another day for DeFi. We've got Sonic and, you mentioned Cosmos. Pendle, I think, falls off of the coin market cap top 100 because of the other coins they include. But Pendle and Sonic, both, major players in DeFi. And so, again, the more we see DeFi coins running, but it was interesting to look at the 7-day Zcash again. That's an old one for sure. That was 2017, I believe. Yeah, I bought it.
It's like the private Bitcoin is what they call that. It's 21 million coins. There's a little bit of a privacy layer, and it's somehow skirted by a lot of the anti-privacy regulations. A lot of people in Silicon Valley like it. I think I hold one that I've just probably wrote down 90%.
Yeah. I bought it originally, I think, because I was trying to ride that line of okay, why is this the one that seems to have regulatory approval as the privacy coin? It was on Gemini. It was back when Gemini had 4 coins. It was Bitcoin, Ethereum, Litecoin, and Zcash. And I was all right, well, if it can get through the ringer in New York, I guess it'll be around.
We need chat to type in Ondo, and we need 3 different people to type in Ondo, and then there's going to be a Candyman situation happening, folks. So if you can type in Ondo, we need to resurrect Josh from the Lazarus pit. And if you could do it while in a bathroom in the dark, typing on your phone, that really helps us. It's going to make sure it happens there. We do have a $5 super chat here. Do we think we can see more falling prices today after Papa Powell speaks today, looking for the super sale? I think, and maybe Ando man will agree here, I think Jerome Powell's speech has probably been amended over the last 72 hours. The way it would be amended would not to be make the markets more bearish. It would make the markets more bullish. And so if I had to choose a direction, I'm leaning towards yes, but this is only like 60-40. There's the Ondos and almost on cue.
Yeah, well, we got to turn his camera on.
Oh,
I just don't want to walk away from the switching board, but give him just a minute to get it all rolled in there. But I tend to agree with you there, DZ, that we are going to see probably somewhat of a dovish, he's going to be moving more towards rate cuts, I believe. I don't think he's said anything quite negative. He's been moving that direction for a while, and now we've got positive unemployment numbers as well. Not positive like bad unemployment numbers, which is positive for rate cuts, if that makes sense. The rate cuts become more likely. So I think he's going to deflect mostly a lot of these things, but that is the million, billion, or potentially $1 trillion question is what is the Fed going to do?
Well, we've seen a huge fluctuation. If you want to cut this screen here and give you time to mess with the camera. So this is Polymarket, and this is the Fed decision in May. So we got a decision in May, we got a decision in July, or is it June? And so we're looking, how often is Jerome Powell going to change interest rates? And this is the benchmark rates that we're looking at. And Polymarket has seen a huge divergence over the last 48 hours. No change, no change. I mean, basically 85% odds we were going to see no change. 85% a week ago, 83, I think maybe even spiked a little higher, like 86. As of now, look at that, no change. So the odds of no interest rate cuts just plummeting, falling off a cliff, fell as low as 58%. So close to a 50-50 shot. We were going to get a decrease versus no change. So we're seeing just a major increase in the odds. Jerome Powell's going to cut rates. Josh, what do you, I don't know if you're thinking about the Che Powell speech later on.
Covering it later on here tonight, or well, not tonight, actually, here in about 30 minutes, guys. So make sure you guys stick around. We have the Fed Summit taking place here, where a couple of the governors will be speaking. And then, of course, Chair Powell will be speaking at, I believe, 11:25. But yeah, I mean, the markets are definitely, they're all over the place, but I'm not veering off our prediction that we've been following since last summer, which is June. June is going to be the rate cuts here. So Fed Watch tool, I'll pull it up for you guys.
Yeah, I need your screen.
And share the screen, and I'll share the window so that way it looks a lot better here for DJ there. Let me zoom out, and boom, there we go. There we go. Fed Watch, you're 33 days left, guys. You're 33 days and 3 hours away from it. But now in May, this is insane. Okay, this used to be a 0% chance. There's now a 44% chance markets are believing for the Feds to cut interest rates and actually lead us into the end of QT in May. Now,
for
I
May,
would love to see,
wow.
for May, yeah, I would love to see that. And this is because of two things. One, I don't know if you saw the employment data that came in today. Yep. Unemployment rised, but non-payer unemployment rise. That's really all that matters.
4.something%, I think.
Yeah, I think it was, just a little bit here. It wasn't like anything crazy, but definitely not what was expected. But two was going to be the U.S. 10-year Treasury. Scott Bessent has been able to pull that below 4% for like the first time ever, and they're looking for a target about 3.7% here in June. So if you guys are looking at, the Fed's decisions here, I'm still, I don't want to be the bear here. I am still looking at the June rate cuts here, which is now completely fluctuated. And actually even June is a little bit different here. It's actually gone down a little bit. It was about a 60 or 80% chance. Now it's about a 50% chance. So very interesting to see here. These are volatile on the daily right now with every new economic data point, with Trump coming out and, slapping tariffs, maybe China slapping, I think, another 34% or something crazy today. It's going to be back and forth. And for this reason, I'm expecting June. We're going to see this move massively in about 30 minutes here, though, when Jerome Powell speaks. And hopefully we'll see those interest rates cut. That's what we want to see.
It makes sense, I think, a little bit that it pulled back a little bit odds for June, because if the odds are for May is going up, the odds that they have back to back maybe is unlikely, May and June. So kind of makes sense. But it seems obviously at this point, not obvious, but it seems very likely that we're going to see something.
It's 100% chance in June.
Wow.
This is 400 and 425. So it's 100%. Never mind. I was like that. There's no way it just switched. Because then I went to July and I was like, oh wait, no, there's a 100% chance that just so yeah. The Fed Watch tool is they're pricing in a 100% chance that we get a Fed rate cut in June.
Okay.
So,
Yeah. That's crazy.
yeah, that's mind blowing. So 44 now in May and 100% in June.
We got people saying, look at the markets pumping. We have the $2 super chat from Feels Good Gaming. He can't wait for his haptic feedback suit, anyway. But looking at the 1 minute on Bitcoin, yeah, Bitcoin falling a little bit down, put in a little bit of a lower low, but a lot of the altcoins are showing a lot more strength. We'll just look at Solana. Maybe just to make some of the Solana moon boys out there happy. But yeah, you can see much higher lows, just showing a nice consistent potential bounce from some of the low areas that we just put in over the last 72 hours. But to me, it's feeling increasingly more and more like a little bit of a bottom, but we do have some technical levels below us. Let's talk about China's tariff and China's escalation here. Bitcoin dropped as China escalated the trade war with a 34% tariff on U.S. imports. So they imposed 34% on U.S. goods, escalating tensions and triggering a 3% drop below 82K, although it was only brief. U.S. miners, we were talking about this yesterday, may face higher costs due to the tariffs on Chinese mining equipment. It's going to impact their profitability and the Bitcoin supply chain. But China, like we were saying, 34% tariff on all products imported from the U.S. It's going to start April 10th. So this is when it's going to take effect about a week from yesterday. Previously, Trump had imposed the 34% tariff on China in addition to the 20% tariffs already imposed in 2 phases. That means a total of 54% tariffs were applied to China. If we look here, both Bitcoin and the markets were affected. S&P 500 fell 5,000 points. While the Dow Jones dropped from 41,000 to 40,500. Sorry, they dropped from 5260 to 5250. Now, what will happen to Bitcoin when the trade war escalates? Well, it tends to behave like a risky asset during sudden uncertain periods. Historically, what happens historically, though, during these times? Historical patterns support this reaction. During the trade escalation in 2018, 2019, Bitcoin experienced significant sell-offs as tariffs escalated, only recovering when the narrative of value preservation took precedence. Little bit of an asterisk. This was also the bearish part of the 4-year cycle. So, maybe just take that with a grain of salt. However, what about the long-term outlook for Bitcoin? It may not be as bleak as the initial market reaction. Some analysts suggest that prolonged trade wars and economic friction could enhance Bitcoin's appeal as a decentralized asset unaffected by government intervention. If tariffs lead to inflation or weaken fiat, like the dollars in your wallet, investors may turn to crypto as a safe haven. I would say trade escalations, do they increase the market for gold and Bitcoin? I think there's an honest argument for yes. I think in the long term, yes. Maybe there's short-term panic. People are selling. People got to sell assets to pay their bills. But I think on a long enough timeline, yeah, this makes gold and Bitcoin a lot more lucrative and a lot more valuable.
Yeah, I mean, you could see that reflected in the prices over the last year. I mean, Bitcoin has crushed it. Gold has absolutely crushed it. Bitcoin, even recently in this past week, I would say has held up extremely well compared to the stock market. And a lot of this stuff comes back to what Josh mentioned a little bit earlier, and I do want to touch on that for a second. The treasury yields, right? That is really what this is all about. A lot of people, if you guys aren't familiar, there's been a lot of talk about the yields getting out of control, specifically the short-term yields. I mean, the 2 and the 10, 2-year treasury bond and the 10-year treasury bond are the ones that people watch a lot. They're the ones that people really talk about. Oh, when the 2-year and the 10-year invert, that's really, really bad. Look at the chart. They're just right here. It's all green. I wish this was red, so it made more sense because these are all minuses. Yeah. But in the last month, in the last year, look at how much they're coming down. And what's really important to watch, like I said, is the 2-year one at 3.5 coming down and the 10-year one at 3.9 coming down. Obviously, you're going to want to get a higher yield on a 10-year bond than a 2-year bond. And when you see the 2-year, meaning like they're really trying to incentivize people to give us money on a short-term time basis. Like that sounds like somebody who's broke. You don't want to see that. And you're starting to see this break on other places around the world as well. I think I saw something today that said the Swiss, I want to say Swiss treasury bond was running negative, where they're like literally paying people to buy their, to borrow from them. So that is the real story. Everybody, you can talk about the stock market all you want, and retail people and people with their retirement and fixed income places, they care about what's going on in the stock market. They care about commodities and some of these bigger things. the people that run the world, the governments around the world, it's all about the bond market. Like anybody that's a sophisticated investor will pretty much tell you the bond market tells the story for everything else. And that's what Howard Lutnick's been laser focused on, Scott Bessent. And really what these tariffs are all about is getting the treasury yields under control. And that's what's happening very, very quickly. They know the Fed will cut. They know, people will boost up assets in another way, but once they have the treasuries under control, that is a good sign of health in my opinion.
There's tens of trillions, compared to $1 billion corporation imploded. That's going to affect the stock market. We're talking about tens of trillions of dollars. So it's just going to have a lot bigger move. You can bet on the 10-year treasury falling to 3.5% on poly market. It does seem like the odds are soaring that we're going to get the treasury yields down to 3.5%. It's now up to 44% on poly market. The lower our 10-year yield is, the less we have to pay out for our debt. So the government wants the yields to be a little bit low, which will then lower interest payments.
And that's the conversation that the media doesn't want to have either as well. Like, it sucks. The stock market's it's hurting. The Magnificent Seven, they've drawn back pretty hard. You've got a massive pullback here. Bitcoin, surprisingly though, holding up pretty well today. I mean, it's at 83K again right now. Looks like that 81.5 is going to be some significant support. But the conversation here is on the long end of this is how much money is going to save the taxpayers. Like, this is going to be what allows us to debate in Congress on the House floor and the Senate floor, massive tax cuts. Because if we're going to refinance our $7 trillion in debt in June, it's I think out of the $9 trillion with the refinance about 70%. That is going to save taxpayers hundreds of billions, if not trillions of dollars over the course of the next few years. So the lower they bring down that yield, the bigger the tax cuts we are going to receive, which will overall flow back into the economy with more consumer spending in the long term. So, you got to kind of just pay attention to noise right now, guys. Like, look, we have to be honest with this. It's like people are going to say that, no matter what happens, we did not call the top here. We were definitely off on the top of this market. We're not afraid to say it. Now, I do not think this bull run is whatsoever over. I think it's absolutely horrendous that the same people that were telling you, inflation was transitory, that Hunter Biden's laptop story was fake, like all these things are the ones now the boys who cried wolf, saying that we're going to enter a recession. For me, it's time to double down. It's time to start really dollar cost averaging into these projects, whether it's your ETFs, your VUs, your VIMs, your Bitcoin, your Link, your Ondo, etc. You have a massive opportunity here to start accumulating this. And it's just one of those moments that is going to be used to fearmonger a lot for political theatrics and whatnot on the mainstream media outlets. And we have to move forward here. We have to move forward from this. But what on a mid to long-term timescale here, I was watching Alex Becker last night just rant, and I loved it. But ultimately is, there's not anything really bearish on the horizon. So if you're somebody that was scared, of course, there could be, again, we're talking about scraping the bottom of the barrel. Looks like the SPX here down to 5,200, maybe getting a little of a bounce here. Actually, don't even know today. Yeah, bouncing up a little bit here. It may take a few days here. I'm telling you guys, we're still looking at the same date. April 10th is your CPI data. So the light is at the end of the tunnel. It does feel like we're, getting near that bottom and these lows in this market. And I think this is going to end up being one of those top moments where people look back and go, man, I should have accumulated more. I mean, ask yourself this. How many bears have been telling you Bitcoin is going to go to 73K for weeks? And then Trump drops tariffs that markets did not expect, and we still didn't go below $80,000. So the SPX is plummeting, and Bitcoin's holding itself pretty well against it. I mean, we dropped definitely from 86K down to 83K or 82K again, but we're just stuck in the range. So for me, that's very, very bullish. It's a lot of accumulation.
I agree. It's holding, I would say, extremely well if you compare Bitcoin and gold to the stock market. And there's actually a question where, and I appreciate Portnoy sharing this out there, or putting that question out there. If I can, man, I'm just not fast enough. But he said, I got a dumb question here. If the point of Bitcoin is to be independent of the US dollar and non-regulated, why is it basically trade exactly the same as the US stock market? Market up, Bitcoin up, market down, Bitcoin down. And Saylor came in and said, trades like a risk asset in the short term because it's the most liquid, saleable 24/7 asset on earth. And I agree. It's basically, it does trade like a risk on asset, but it also operates as somewhat of a hedge. You go back and look, Bitcoin was extremely strong, like Josh mentioned, through these tariffs. And I think it's going to perform extremely well. I'm telling everybody that I care about now, go all in. Now's the time. Again, selling cars, selling a house, selling real estate, doing everything I can to get as much Bitcoin as I can at these prices. This market isn't over. And you're going to continue to hear, by the way, until it's too late, until we start to move back up above 90 and towards 100, you're going to be hearing people tell you it's going to crash. It's going to hit 72. We're going to lose 72. It's going to go to 40K. I saw somebody pulled that up in the chat earlier. Somebody saying prices are going to hit 40K this year, and you're going to hear that noise. You're going to hear that FUD. But the truth is, all those same people are going to flip back and tell you to buy when we're back around 100K. And we're going to tell you to buy right here, right now, because this is your opportunity. JP Morgan coming out saying there's a 60% chance of recession. Like, those to me
And by the way, that was just an analyst. It wasn't like it's again
report.
Another headline. That's what I'm saying. It's like you have Jamie Dimon, the CEO, was saying that he's a fan of tariffs. That long term is really good for the economy at Davos this year. And then now they have a headline analyst saying, "Oh, 60% chance."
Yeah, I think we've all seen the montages. Pelosi said it, Biden said it, Obama said it, Clinton has said it. It's, people kind of move the goalposts, I think, when it comes to discussing government policy. And I think that's fair to say. I do want to say I'm closing some of the trades, everybody. So if you're wondering, we are going to go ahead and close some of that. In the meantime, we might have some breaking news dropping over here. We're not sure, so we'll maybe get into that. Now, Josh, we're doing a little long stream today. I was going to roll into some of the member stream activities where we're going to talk about stocks, and I got to talk about Cardano. I know some of you play a drinking game when I say Cardano. Good luck. All right, we do have some Bitcoin news here. It defied the tech route. We were kind of saying that earlier. NASDAQ suffered one of the worst drops since 2020. Meanwhile, Bitcoin held firm. I want to share this. I didn't know this. Apple shed $315 billion market Thursday, making it the second largest single day loss for any company in history. A lot of people talking about that. Amazon and Meta also took major hits. The Magnificent Seven bled $1 trillion in value. We did a friend of the channel, Caleb Franzen, pointed out the divergence of Bitcoin versus stocks. Bitcoin is up 3.4% today relative to the S&P 500, particularly in a risk-off environment. Is pretty remarkable to see. Also, Bitcoin still holding above its 200-day moving average. So we love seeing that. And here's just a good take. Arkham said it best. Donald Trump just tariffed the entire world. So Grayscale buying Bitcoin, Fidelity buying Bitcoin, ARK Invest buying Bitcoin. And I bet you dollars to donuts, BlackRock clients, they're probably going to be buying Bitcoin today too. If I had to take a guess, they love buying the dip here. Any thoughts on Bitcoin before we roll into alts?
It's quite literally the greatest asset on planet Earth. I mean, you're watching everything from volume, accumulation, adoption, like everything is bullish for Bitcoin from the US government globally. Like, just look at what's going on in almost every other nation. Like, people want to come out here and say the United States is like the weakest nation and we're failing. It's like, no, we are still the world's greatest nation on the planet. We are still the world's conqueror. And I know that sounds like dramatic, but it's the truth of the matter here. And we have now Bitcoin strategic reserves being discussed. We have a digital stockpile discussed. We had Senator Ted Cruz in Texas just passed the Bitcoin Energy Act. You now have, of course, even Tennessee with their governor coming out and saying they're going to invest more into Bitcoin mining. The accumulation is only continuing and the demand is only increasing and that supply is only decreasing. This is, if you're not bullish on Bitcoin, I seriously don't know why. There's not a single thing happening right now in our markets that says Bitcoin's going to, like, people calling for 44K, 50K. Okay, ask them why. 44. Oh, well, Trump. It's like, okay, well, besides them having maybe TD, like, what's the economic data points that are pushing them towards a 50%, mind you, correction here from Bitcoin right now? In 2021, it was China closing down half our Bitcoin miners. We're not going to see that anymore. The race has started. Everybody is mining more and more Bitcoin and deregulating. So what is it? Is it going to be Binance collapsing? I don't necessarily see that taking place.
And we're not going to see worse hit on this. Like, the biggest thing that we're probably going to see just happen, and most likely it's going to go up from here. And all of the things we're experiencing, I don't know if you guys talked about it yesterday, but have been talking about that was the most bearish event. And now what's going to happen is every time one of these drops, things are going to get a little bit better and then they become bullish catalysts. And it's already working. We just had this breaking news. Thailand to cut the U.S. tariffs to 0. It's actually already working. And
Cambodia did too today.
Yeah, several others. And there's going to be different sizes and different matters where it impacts things more. But what we're going to start to see is more and more of these things get dropped off from opposing countries. And then we're going to back off of ours and they're all going to come, back into equilibrium, and it's going to be bullish news every single time. And it's going to be a point in the market where bullish news actually affects the price of Bitcoin. And a lot of people didn't. I don't know if we mentioned this talking about the China tariffs, but I did see it talked about a lot in the news that I was reading, that it's a little bit understated in the sense that China throwing tariffs on the U.S. isn't really that big a deal. I don't know if you guys have ever been to China or
I think Crypto Face was saying,
Yeah.
and I'll pull up his post.
they don't use a lot of Chinese, or they don't use a lot of U.S. products. So them putting a 30% tariff on stuff that comes from the U.S. doesn't matter. It literally affects us zero because we're not selling to them. So I think Trump was right when he said they panicked and they they kind of showed their hand a little too early. And I don't think it's going to play out well for them. They are not economically strong right now. Like, and if they're trying to act like they are, it's going to blow up in their face. So.
Crypto Face, one of the funniest content creators out there. Real funny guy in person too. Crypto Face, we have two comments we're going to read here. Oh no, China tariff 38% on U.S. goods. Oh yeah, they don't import anything from the U.S. I've been to China. Nothing is from the U.S. there at all. They have 10x the people we do. Everything is America. Everything in America is Chinese. Nothing in China is American. America needs to get back to sovereignty. This is the post I thought was pretty damn funny though. Sign me up for a trade war versus a Chinese equal. I'll do my part. If you don't know, CryptoFace has won a lot of the trading wars you see. When you see videos, live streams, people kind of trading head to head. I personally would not want to go against CryptoFace and Market Cipher, especially that Market Cipher B.
Yeah, I seriously think anybody just fudding America, like Chad is even saying it here, you're just going to be wrong. It's like you're really on the side of recession. You're on the side of America failing, the side of not bringing back manufacturing jobs. You're at the side of supporting. It's crazy too, because like if you don't want these tariffs, you want to keep buying Chinese goods. Like I was looking into the ILO yesterday, which is the International Labor Organization. It's like there's 170 million children grinding away so you can have cheap sneakers. And it's like it's such a double-edged sword when it comes to the standards for the opposing party when you have any of these discussions on tariffs.
Josh, we drive Teslas. We can't say anything.
I know we're Nazis, dude. We're
no, it's not even that. It's the lithium,
bro, because we drive.
No, the lithium mines.
Yeah.
Oh yeah, no, I know. That's what I'm saying. But it's just crazy that these conversations roll out today. Like I saw the headlines today. They're like Trump's tariffing penguins in the Norfolk Islands. I don't know if you know this, outside of Sydney, Australia. The reason why he tariffed those islands is because if he didn't tariff those islands, Australia would just use them as
potentially.
Yeah, that's all it was. It was just a block. It's like it doesn't actually. If no one's tariffing penguins. But the headlines in today's society are so atrocious. It's just it's just mind-boggling to me how much clickbait there. Everything's clickbait today. If you're not clickbaiting, you're not marketing right.
You're not trying. You're not doing your job.
I really don't know.
We have a 6-pound super chat from Antonio Brenda. China is struggling with deflation and overcapacity. Germany, France, and contraction. UK and Italy flat. What will happen to that when they lose the best client? I think a lot of people, focusing on, well, China's not buying anything. What does that matter? I think it's going to affect them a little bit more because, we are the consumer for the world. And so I think it's easy to argue that we have the leverage there.
Yeah, that's the thing. People don't realize our number one, we are the top consumer. So everybody wants the US to buy their goods. And our main export, what do you guys think what's the number one export for the United States?
Oil.
Well, I gotta, it's a trick question, but it's the dollar. It's the US dollar. We export, they all rely on our dollar and they all rely on our consumption. That's our main contribution to the global economy. And you can't really fight those two things. We're not going to stop consuming, and you can't really fight the dollar because your currency is based on the value of the dollar. It's an incredible, you call it an unfair advantage that happened back in Bretton Woods 2.0. As soon as they dropped backing it by gold, we got the entire world to say we'll back all of our currencies with dollars because they have the most gold. And then we came out and said, actually, we're not going to back our dollar with gold anymore. Ha, we got you. We win. We can do whatever we want. And it's kind of played out that way until something like Bitcoin has come along. Now you got some
breaking 52 seconds. Literally breaking. I know sometimes we joke. This is 52 seconds. All right, 59 seconds go. Donald Trump posted from Truth Social. All right, this is a aggregated account, so I think it's like within the second here.
It is.
This would be a move. This would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He's always late, but he can now change his image and quickly. Energy prices are down, interest rates are down, inflation is down, even eggs are down 69%, Donnie, and jobs are up all within 2 months. A big win for America. Cut interest rates, Jerome, and stop playing politics. Wow. All right. That's breaking news there.
Yeah, the only thing I just know about Jerome doesn't fold to the politics. He's never done it. He's never folded to the political perspective. So it's I don't know. It's gonna be interesting to see if he cuts him. If he cuts in May, this changes every conversation. Because again, you guys are talking about treasuries are down, interest rates start dropping, borrowing money becomes easier, the private sector starts growing. Like, again, this just feeds into the narrative of the 6 month outlook here, where these markets are just doing absolutely extraordinary. Um, and I guess, hey, maybe just save this video, screen record it, guys, and hold us accountable in 6 months if we are in the recession, like you guys are all claiming we're going to be. We will come out and admit we were wrong. But yeah, it's an interesting time here. But we'll see what he says today. I'm very excited for this. We're now only 7 minutes away from Jerome Powell coming out and speaking, guys. So make sure you hit that like button, subscribe, repost if you're on X, guys. Share this with a friend. Jerome Powell is speaking in 7 minutes, and we'll have a much deeper insight into what his perspective is on these markets. They're definitely going to be asking him questions on the tariffs and the overall economy. And of course, again, when we're looking at the charts here, there's now a 100% chance, at least from what our prediction has been since summer of last year. We've been following the macro, again, missed maybe time at the top on Bitcoin and altcoins. But when it comes to the economic data, when it comes to the macro, when it comes to the interest rates, we've been spot on here. And now we're looking at a 100% certainty, according to Fed Watch tools, that we're going to get that rate cut. We're going to get the end of QT in June here, which is absolutely insane. We predicted that a year in advance there for you guys. So that is in just a few moments. DZ, keep hitting us.
Yeah, we got some altcoin news. Grayscale filed for Solana ETF. This is breaking from this morning. Staking is going to be excluded. So it's the form S1. This is the major form that they got to do. Is the formal registration statement required to offer and trade shares. And the ETF would hold Solana tokens and aim to track the price through CoinDesk price index. And Coinbase, prime broker, custodian, Bank of New York Mellon, America's oldest bank, will be the transfer agent. It will not participate in staking or handle any SOL forks or airdrops. So don't be thinking you're going to get like Bonk 2 airdrop if you buy this. But yeah, markets largely muted to this. But I didn't want to share the Solana chart. This is the 4-hour chart. We could go to the daily chart here. Fell out of this range. And I just wanted to put some on your radar. We could be testing this range. This is just an important level to watch if it happens, say, over the next day or two. That is $102 right there, depending on when this might hit. So potential downside target for Solana. Hopefully, obviously, if you're holding Solana, you want it to bounce from there. Far cry from its drop from $290 just to measure how much time this has been. Solana has now fallen 61% in 76 days. I do want to say one thing here. Altcoins, then we're going to look at DeFi Llama. Altcoins are set for one last big rally, but analyst says just a few of them are going to benefit. And here's the ones he says are going to benefit: the ones with real utility and strong network activity. Hopefully, strong network activity will pick up on Cardano. I do believe that quality altcoins, where activity returns, activity drives prices. We will definitely see a recovery in some of these more high quality names. We keep scrolling. This is what I want to share here. The altcoin season index, we've been talking about this as a newer thing, measures 100 cryptocurrencies against Bitcoin over the last 90 days. It is now only 14 out of 100, leaning towards a more Bitcoin dominated market, referring to as Bitcoin season. People feeling a lot of pain. If you want to know about activity, I would recommend DeFi Llama. It's just a good starting point here. And you could do things like look at 1 month change. This is month over month change. What do we see in the green? Some of the hotter altcoins: Binance Smart Chain, Tron, Barachain, 40% pump for Sonic. Look at that. Sonic with a 40% pump, 69% Say. Now you can click on Say, and then you can add the price here. Okay, so TVL is here.
Usually price is right there.
I'm blind, y'all. See, I'm blind. Y'all just got to bear with me sometimes. I'm loving this. I'm loving this. TVL. Whoa. Huge opportunity and Say, if you ask me. Look at the TVL. Look at the blue line skyrocketing. Meanwhile, Say price is down.
Yeah, it's just this is the time to buy, dude. It's the time to buy. It's the time to dollar cost average. If you don't have the money to do it, like, start doing some side hobbies. Stop watching Netflix. Stop watching Hulu. Stop beating off, dude. I'm watching most of you out there, you degens, dude. It's take that time and go put it into like just making as much money as you possibly can right now and putting that into these markets. Even if you're looking at the SPX, I don't care if you're boring and you want to put it into just the VU and the VIM, you're down 15% now on the overall stock market. Your Magnificent Seven down much, much more, upwards of 20-25% bear market territory here. Bitcoin, altcoins, like I just what pains me is I know for a fact we are going to come back to all-time highs in these markets. And everybody that did it and wanted to wait for 55K Bitcoin, wait for 75K Bitcoin, wait for another 30% drop from your favorite altcoins, when they're back at all-time highs, dude, everybody is going to be saying the same question they always do, DZ. DZ, is it a good time to buy? Is it a good time to buy right now? Should I buy today?
That's what gets me. I mean, we've got over a decade of experience between us specifically in Bitcoin and crypto. I can tell you from doing this a long time, this past week, and I tweeted this earlier today, has been the time to be accumulating. This is the time, whether I don't care. It's always safe to bet on Bitcoin. When you guys were talking about Bitcoin bets or betting on the future, whatever, buying Bitcoin is always a great thing to do. But altcoins as well. These altcoin prices are very attractive. A lot of them are looking like they're bottoming their market structure, and we're about to see a pivot from the Fed. We're seeing the dominance fall. What did I miss?
No, just the chat. Nothing we can repeat.
I'm just like Mr. Techno Goody. Like, I'm just.
Yeah.
Does he have a recliner in his bedroom?
He was like doing it right now. He's like, how did he know? He's like, I'm just laughing. I have a dirty sense of humor. I'm sorry, TJ. Keep going.
So does our chat. It's fine.
Yeah,
I'm just saying now's the time. If you want to be hanging out in your bedroom all the time in a recliner and never want to have to work again, then you better be accumulating.
Because you're trading.
Guys, I'm a Fed. I'm hacking your laptop cams. Remember?
You're just in the bedroom studying liquidity pools.
Yeah.
I have 2 terabytes of data. Like. Anyways, back to you, TJ.
like the Vegas shooter's brother. All right, I don't think I could say that, so please smash that like button. Otherwise, we're gonna get boosted by the YouTube overlords.
Love you guys. Short Coin, thank you for the $5 super chat. Love hanging with the Disco fam. We absolutely love you guys.
And I did want to. We did skip this. I put it on the screen, but we didn't read it. And I think it's. Trump. This is what Trump wanted with these things: oil down, dollar down, yields down, and everyone is shocked when we got that. What happens if the massive deal between USA, Canada, and Mexico happens? Good luck competing with that. And I agree. Like, all of the things that we're striving to accomplish are happening, and they're happening very quickly. And so if we can get the pain out of the way in these first few months of him being in office, and they can go back and fix a lot of the issues we had before. I mean, the economic policy that was happening for the last several years has been terrible. And we're reversing that really fast. It's going to come with a little bit of an adjustment. And I saw somebody else say this is one of the first times in a long time we've had a sitting U.S. president that's putting the long-term future of Americans ahead of the markets and the stock markets and their donors and the people that gave them money that just want pump the stock market, print money, and we'll all get rich, and screw the middle class and forget about the people whose dollar is getting devalued and they're unable to purchase groceries. We don't care. We're getting rich. So, yeah.
That's my bad. I'm just setting it up.
Yeah, we're setting it up.
It's like, everything we voted for is happening. The borders are completely closed. Like, it's a weird time in the market. It's everything Scott Bessent and Howard Lutnick and Donald Trump campaigned on is happening. It's, the people that are, again, it's just unfortunate that we saw markets react the way they did, even though we knew this was kind of coming.
How is the Bitcoin Ways dog comfortable in that chair? Accumulate. Hit the like button for the puppers. We got a couple more alt stories here before we get in Jerome Powell. Coinbase Derivatives has announced that they submitted application to the CFTC for XRP futures contracts, and they expect that it'll be launched April 21st. So one day after that holiday, Coinbase Institutional files for the futures trading with the CFTC. And this is going to be futures contracts. And these are going to be a monthly cash settled contract. So don't got to worry about every Friday. Quarterlies are going to be big, but the monthlies, they're going to be traded for the current month and 2 months ahead. And trading will be paused if XRP moves more than 10% in an hour. I found that a little bit interesting. I would have figured they'd maybe leave that out, but XRP futures potentially coming, Coinbase applying here. But looking at the charts here, a little bit of bearishness.
Smash the likes if you're an XRP holder.
Yeah, smash the like. And smash the like if you don't want this head and shoulders to play out. If the head and shoulders plays out, left shoulder, head, right shoulder, the way you would do it is measure from the head to the neckline to the downside. It could also reverse breakout to the upside, showing a $1.30 XRP if it moves to the downside. But could we see a 73% pump? A lot of people are looking at it. We're going to look at the charts here. part of the reason why the RLUSD stablecoin could boost XRP's price by enhancing utility, enhancing liquidity. But they got a couple charts. I got a chart. They got this chart right here. So this is the symmetrical triangle. The way you measure that is you find the maximum length here. And then from the breakout, I guess they have it come from the bottom.
People are saying
we
he's
measure
on.
to the upside.
Are we sure he's not on? You sure
I
that's
have it on my screen.
a lot of people are saying he's live.
It is live, but it looks like it's just a graphic
Loading?
right now,
Yeah.
right?
I mean, pull up my screen here, chat. Yeah, guys, we're pulling this up right now. I even have. Oh, here you go. The other one's okay. Wall Street Journal's behind, so he just went live here. 37 seconds ago. Here we go.
Well, I need that screen.
Oh,
All right, while he's setting that screen up in 10 seconds, give me 10 seconds here for the XRP chart. We are still within this parallel channel range, and right now we're playing around with the middle point. So XRP is trying to find a direction. Does it want to touch the bottom of the range or touch the top of the range? I think if we do head to the downside, I think, obviously no one knows for sure, no crystal ball, I think we bounce off this 200-day moving average. That would be my guess, though. What do we got for Jerpow?
I'm working on it. Hold on.
I do want to start by thanking all of you for the work that you do, which is incredibly
Super
important,
quiet.
and we do appreciate that at the Fed. I'm sure that this room full of reporters does not lack for questions to ask, and before answering a few of those, I'll briefly summarize the outlook for the economy and monetary policy. At the Fed, we are squarely focused on achieving the dual mandate goals that Congress has given us of maximum employment and stable prices. While uncertainty is high and downside risks have risen, the economy is still in a good place. The incoming data show solid growth, a labor market in balance, and inflation running much closer to, but still above, our 2% objective. After a couple of years of solid growth, many forecasters have anticipated somewhat slower growth this year. The initial reading for first quarter GDP will be released later this month. The limited hard data are consistent, though, with a slower but still solid growth outlook. At the same time, surveys of households and businesses report dimming expectations and higher uncertainty about the outlook. Survey respondents point to the effects of the new federal policies, especially related to trade. We are closely watching this tension between the hard and the soft data. As the new policies and their likely economic effects become clearer, we will have a better sense of their implications for the economy and for monetary policy. Looking across many indicators, the labor market appears to be broadly in balance and not a significant source of inflationary pressure. This morning's jobs report showed the unemployment rate at 4.2% in March, still in the low range where it has held since early last year. Over the first quarter, payrolls grew by an average of 150,000 jobs per month. The combination of low layoffs, moderating job growth, and slowing labor force growth has kept the unemployment rate broadly stable. Turning to the other leg of our dual mandate, inflation has declined sharply from its pandemic highs of mid-2022. It has done so without the kind of painful rise in unemployment that has often accompanied periods of tight monetary policy that are needed to reduce inflation. More recently, progress toward our 2% inflation objective has slowed. Total PCE prices rose 2.5% over the 12 months ending in February. Core PCE prices, which exclude the volatile food and energy categories, rose 2.8%. Looking ahead, higher tariffs will be working their way through our economy and are likely to raise inflation in coming quarters. Reflecting this, both survey and market-based measures of near-term inflation expectations have moved up. By most measures, longer-term inflation expectations, those beyond just the next few years, remain well anchored and consistent with our 2% inflation goal. We remain committed to returning inflation sustainably to our 2% objective. Turning to monetary policy, we face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. Our monetary policy stance is well positioned to deal with the risks and uncertainties we face as we gain a better understanding of the policy changes and their likely effects on the economy. It is not our role to comment on those policies. Rather, we make an assessment of their likely effects, observe the behavior of the economy, and set monetary policy in a way that best achieves our dual mandate goals. We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent. Avoiding that outcome would depend on keeping longer-term inflation expectations well anchored, on the size of the effects, and on how long it takes for them to pass through fully to prices. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy. We understand the benefits of a solid economy where workers can find jobs and inflation is low and predictable. We also understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. That is why we at the Fed will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions. Just fine, thank you.
Care to elaborate?
So far, so good.
Chair Powell, yes, thank you so much for being here and taking our questions. You were talking about the economy as being a very strong economy. You characterized inflation as coming down, employment as being very strong still. However, President Trump earlier this week, when asked about the market volatility we've been seeing, said the volatility was, quote, to be expected. This is a patient that was very sick. We inherited a terrible economy. A lot of voters did and do agree with that assessment, or at least in part. I'm wondering how you would respond to that assessment and the disconnect between the story of the data and the way a lot of people are feeling about the economy.
Sure. So let me just be clear at the start. I make it a practice not to respond to any elected officials' comments. So I don't want to be seen to be doing that. It's just not appropriate for me. But the situation, I think, is this, and people, when they're surveyed, they are unhappy about the economy. That seems to largely reflect the increase in the price level that happened when inflation was high, 2021, 22, and 23 largely. Inflation is now back down to much more normal levels. Unemployment is low. The economy has been growing, but people are still experiencing that high price level. In other words, prices don't go down. They know they're paying much more for the basic necessities of life. And they're right that they are, and they're not happy about it, and they're right not to be happy about it. So I think that accounts for the negative sentiment. We, of course, we're looking at inflation, which is the change in prices, and we're seeing that that has come down quite a bit, and that, you know, unemployment is actually low. It's sort of very close to measures of maximum employment, and the economy is growing. So all those statistics are good, but you know, the price increases of the past few years are weighing on people's budgets.
So I'm from Milwaukee, and I've been talking to business leaders, executives, and consumers in our community, in our region, for the last few weeks, mostly before this week's news. Chairman, they're troubled and they're nervous. One business owner told me, if there's a hint of a recession, we're cooked. And he asked me to share that with you. What's your response?
So I guess I would say, let's start with the fact that the incoming data right through this morning's employment report, which admittedly is from roughly a month ago, the week of March 12th, they took the data in. It still shows us a solid economy. Unemployment's still low. I understand the uncertainty that's weighing on people. You ask about a recession. We don't actually we don't make a probability forecast of how likely it is for there to be a recession, but many outside forecasters do. And many of them have raised the likelihood, albeit from very low levels. It's not something that anybody now is forecasting, or some people are starting to. And so there's not much more I can say about that. I realize that the uncertainty is high. What we've learned is that the tariffs are higher than anticipated, higher than almost all forecasters predicted. We still don't know where that comes to rest, though, and we're just going to have to see that through.
At a congressional hearing last year, one of the U.S. representatives said that you were pretty boring, and you thanked him and said that you considered that a very high compliment. And in fact, I feel like it's one of the roles of the Federal Reserve, especially since the housing crisis, to be kind of a ballast, especially in the face of the volatility of the markets and the dramatics that we can experience with the economy. Very steady, no surprises, very reliable. In a moment like this, which also has a lot of drama and unpredictability, but it is not necessarily from an economic crisis. It's by design, it's political. How do you see your role in this moment?
So I think all of the values that you touched on are, in fact, the values that we try to live by. We're driven by, analysis and careful thought and discussion and debate and the merits of things. We try to stay as far as we can from the political process. We don't look at political cycles or things like that. So, and I think people expect that from us. They expect us to tell the truth, and that's what we're going to do. But at the same time, we don't want to be part of the broader political discussion about the wisdom of policies that are not assigned to us. We're not responsible for trade policy, immigration policy, fiscal policy. So we don't comment on those. Decisions are made by others, and what we do is we use our tools to try to achieve the goals that Congress assigned us, which is maximum employment and price stability. So I like to think that over time we're a source of calm, rational analysis and also of stability. That's really what the business that we're in is, providing financial and macroeconomic stability to the public. That's really our purpose.
So how can businesses and individuals and the Fed make plans for the future when so much is being dictated by the actions of a single person? And do you see yourself as the consoler in chief on economic matters?
No, I think, take a step back. What's happening is, as I mentioned, the new administration is making significant policy changes in trade, immigration, fiscal policy, and regulation. And you're still just a couple of months into the administration, and that process will take place. And at a certain point, the new policies will be on the table. They will be having the effects they're going to have on the economy, and uncertainty will decline. Right now, there's a lot of uncertainty about where all that's going to sort out, the forms it will take, and what the economic effects will be. If you fast forward a year from now, the uncertainty should be much lower. The actual effects of the policies should then be pretty manifest and clear. So I think I understand why it just is highly uncertain, both what the policies will turn out to be, exactly what they'll turn out to be, and also what their effects will be in the near term. We just have to go through that process, and it is just kind of a manifestation of our election cycle and a new administration coming in with new policies.
I mean, given all of the change happening and the fact that we are in a period where things have not settled in yet, and that the Federal Reserve and you as chair are very projection, data-driven, policy-driven, how do you handle a moment like now? I mean, can you tweak your plans and projections? Do you just do you have to reset them?
So, what we've had since in the last few months is from the staff has been a placeholder. Rather, they wouldn't call it a forecast because it's so uncertain. They call it a placeholder. And that's kind of how we've been thinking about it. So it's a good time to take a step back and let things clarify. That's why it's just too soon to say what the appropriate monetary policy response will be to these new policies. It is just too soon to say. We can't say with any confidence today. So that's what we're doing. We've taken a step back, and we're watching to see what the policies turn out to be and the ways in which they will affect the economy, and then we'll be able to act. Fortunately, our policy stance is in a good place for us to do that. We're probably moderately restrictive, let's say. So it's not really tight policy, but which is appropriate since inflation is a bit above target. So we think we're well positioned to address whatever may come. And in the meantime, I'd say we're waiting for greater clarity before we consider adjustments.
Business owners in Wisconsin have told me that they can't make their plans. They want to expand. They want to build a new facility. They want to hire or do whatever the future calls for. They say, we're trying to look around the corner. We're not even sure where the corner is, and we're not even sure what's around the corner. Sounds like they're in the same position as you are a little bit.
No, we hear the same thing. Of course, we have an incredible network of contacts with businesses and also universities, nonprofits, all different sectors through the reserve banks and also through the Board of Governors. And that's what we hear. But again, it's a process. We're going through it, and I think we will know when we know what the policies are exactly and what their implications will be for the economy. That will all become clear, and I think that'll be a time when people can make decisions. In the meantime, though, I get it. We're hearing that a lot from people, and we are kind of in the same place, which is waiting for clarity about what our policy path should be. We'll have to see.
As you're talking about placeholders right now and having something in the place when there's so much that we don't know, it does occur to me that this is not the first economic shock that you have steered the markets and the economy through. Obviously, there was COVID almost exactly 5 years ago. It seems similar in certain ways with a lot of uncertainty, a lot of shock, also potential disruptions to prices and to supply, which is very much in the Federal Reserve's wheelhouse. I mean, from where you sit, can Liberation Day be compared to kind of the economic effects of COVID? Are they totally different, somewhat related?
I think each situation is different. There was COVID. There was also then, in the response to COVID, then there was high inflation, and then there was soft landing, and now we have new administration and changes in policies. And every situation, it kind of rhymes, but it's not exactly the same thing. And so in this situation, what we face is what I mentioned in my remarks is you actually have risks for higher unemployment and higher inflation, and that's difficult for a central bank because our tools, which consist of interest rates, either slow down or speed up the economy over time. And higher unemployment would call for speeding up the economy, and higher inflation would call for slowing it down. So you could be in a situation, if we find ourselves in that situation, we look at how far each of the two variables is from its goal, and we ask ourselves, how long would it take to get back? And we weigh those things and make a decision about what to do. But there's no question that's a different situation, very difficult situation. When we faced high inflation, it was painful for the country, painful for the people that we serve, but we knew what policy needed to be. We knew we needed to raise rates quite a bit. During the pandemic, we knew what we needed to do. It was very clear the direction that we needed to take with force, and we did.
It's almost a situation potentially where the dual mandate is at odds with itself.
The two goals are, as we say, in tension, or they may be. I'd say that's not what we're seeing right now, but it's the effects at the margin right now would be for higher inflation and perhaps higher unemployment, but that's a marginal effect. I would say you're not in a situation like we were in the 1970s where the two goals were really both pulling in opposite directions and required. That's where, it's just very hard for a central bank to be the answer to a situation like that. But that's not the situation we're really in today.
One of the questions from the audience that we had is, if unemployment takes off and inflation takes off, which lever do you go for? Which lever what do you do?
So we actually have we have a document called our consensus statement, or the longer version is Statement on Longer Run Goals and Monetary Policy Strategy. And the 6th paragraph of that actually contemplates when the two goals are in tension. And what it says is, think about how far each variable is from its goal, and think about how long it would take for each to get back. So in a way, it's an equation. You're comparing two quantities, which each have two variables. And then you say, you look at that and you think, what do we need to do? And typically one This doesn't happen very often, but if one of them is further away, then you would focus on that one. In the case of high inflation, they actually both pointed in the same direction. The labor market was overheated and inflation was very high. So both of those called for, for tight monetary policy. This could be different, but again, we're not actually facing that today.
I feel like there's another tension inherent in your job, which is that you're looking at the macro economy, at the global economy, really, and the US places in it, but also the data you're looking at is very profoundly human, as Jim has been pointing out. Jobs, I think, and prices are probably the two most human pieces of data, and certainly in our day-to-day experience, probably the things that loom the largest. How do you reconcile those two things when you're looking at the data, like both the global markets and knowing that the data represents a lot of lives and jobs and egg prices and things like that?
So I think at the Fed, we always keep a focus on the people that we serve, and we know and are very conscious daily that the things that we do have a real effect on people's lives. We know that, and it really does focus the mind. And I think if you talk to people at the Fed, there's a very strong commitment to serving the public as well as we possibly can. Economic events are just very, very unpredictable at times, and there are shocks that you can't see coming. But nonetheless, our job is to, whatever happens, use our tools to bring the economy back to stability, back to price stability, back to maximum employment. And that's what we do. But you're right. We try to keep everybody in the room with us when we're thinking about what to do.
So in response to the last round of tariffs, Harley-Davidson, which is based in Milwaukee, moved some production to Thailand. Now the company might be whipsawed again by the new tariffs. It could be really devastating for sales, for employment, for the future of that company. But a lot of companies are in that same position. And what do you say to companies like Harley-Davidson and their workers?
So it just isn't, I really want to stick to our knitting. I mean, we have this great thing called our independence of monetary policy, and that's critical for us to be able to do our job. But for us to keep that independence, we need to not succumb to the temptation to want to be a player on issues that are not assigned to us. And trade policy is one of those. There are many, many issues that people love to try to pull us in on, almost every issue really. And we just need to stick to our knitting, not get pulled into those things. And so trade policy is a classic one. Energy policy is another. Climate change, many immigration is not really, although all of those things have economic implications and it gets argued that way. But if we treated those as our job, the case for our independence would disappear. So I really can't comment on, we hear the same stories like that, but honestly, the policymakers who are charged with that, they're probably hearing the same stories too, and they're reaching a judgment about what's in the best interest of the country in the long run. That's what they are doing, I guess, and that's, so it's not for us to comment on that.
What happens inside the Fed at a moment like right now, when there's so much change and quite a bit of uncertainty, when you're watching things unfold? What does that look like, practically speaking? What are people doing inside the building?
So I'm very proud to work with the people I work with. I can tell you that in times like this, or times like the pandemic, where the global financial markets were shutting down, the global economy was shutting down, people step forward and they say, "We've got this." These are career people who were here for the global financial crisis. They've got 25 years, 35 years of experience with crises, and they step forward and it's just incredible what they can do and how good they are. It's a great honor to work with them. So right now isn't that situation. We have the situation we have. So, our trade people and our inflation people and our macroeconomists are all working hard to kind of digest the news of this week and try to filter that into the forecast that they'll make. And policymakers are doing very much the same thing. And we're reading everything we can about what's happening and lots of outside analysis too. We don't have an FOMC meeting until May 6 and 7. So that's really a process that lasts several weeks, and we're not quite at that stage yet. But we're kind of thinking ahead to that and working through all of that. I will say though, it feels like we don't need to be in a hurry. It feels like we have time
Really?
to, yes, it feels like we don't. No, it's like I said, you have inflation is going to be moving up and growth is going to be slowing, but it isn't really, to me, it's not clear at this time what the appropriate path for monetary policy will be. And we're going to need to wait and see how this plays out before we can start to make those adjustments.
Question from the audience. One of our SEBU members is, are you in contact with other central bankers in other countries at a time like this?
Yes, pretty frequently. Absolutely. I mean, and the same was true during the other crises I've been through. Not only that, though, we do meet very regularly. The IMF World Bank meetings here in Washington twice a year. We go to Basel multiple times a year to meet. That's all central bankers. And there are also G20 meetings, G7 meetings where the central bankers are there. So we're kind of regularly meeting and talking. And when we're not doing that, we're also texting each other. And
Is there a group chat?
I'm not at liberty to say. No,
That doesn't sound sus.
And have you talked to those central bankers this week?
Recently, yeah, I didn't want to get too specific about this, but yes, I have.
What's their sentiment? Can you characterize that?
I'd rather, again, I don't comment on what my international colleagues say, or it's not appropriate. But we're talking about events. We're talking about the implications for the economy. We're discussing what we're hearing from markets and from business people and for from the elected governments too. It's all the things you would expect us to be talking about on a regular basis. It's one of the best things about this role is that the central banks have a lot. We're all non-political, so we think about things in quite similar ways, and they're real bonds. We're not lobbying each other ever on policy. It's just never. That's just not a thing, because we do our policy here, they do their policy there, but we develop really, really good relationships and bonds with them. It's one of the real pleasures and benefits being able to talk about this, just not only with the great people at the Fed, but also with the leaders around the world.
I mean, it's interesting because it is a job of enormous responsibility and power, but it's also a job. How would you characterize the job of Fed chair? Like, how is it as a job?
Honestly, that's what it is. I really feel just like another person doing that job.
Really?
Yeah.
You just like.
That's how it is. I'm doing a job. I have a job to do. I actually really like the job. I like it a lot. I enjoy it. It can be stressful at times. Nonetheless, incredibly interesting, great people to work with, really important. What more could you want? But that's what it is. And, I'm blessed by working with great colleagues who are really committed to getting it right. I mean, fully appreciate how important it is that we get it right. And do everything we possibly can to bring the best thinking, the best analysis, and debate things, over and over until we feel like we're in the right place. At the same time, there is no certainty in this. You can be wrong because the economy can zig when you thought it was going to zag.
So your term as Fed chair ends about a year from now. What do you think about your job security?
I fully intend to serve all of my term.
Excellent. I mean, as we're getting close to wrapping up, I did want to ask something a little bit out of the box. I think because you do have a position of such great responsibility, people are very curious about you, and I think people tend to read into everything a Fed chair does, small gestures, word choice. I know it's part of our jobs in this room to pore over every word you choose. I did want to ask about one thing that I've wondered about for years, which is your tie. You always seem to wear a purple tie, and every time I think I've seen you, you've worn a purple tie, and I'm wondering if there's significance to that.
Well, at the beginning, the only significance was that I like purple ties.
Okay.
But I will say, so then the next press conference, I reach for a blue tie or a red tie, and I go, maybe not, And so I wind up wearing purple ties, and then it becomes a thing. And now I definitely wear purple ties all the time.
Okay.
But I felt like you didn't. It just felt a little awkward to be wearing one that was identified. We are strictly non-political. I can't stress that enough. We are not. it's not that we're bipartisan. We are non-political. We don't do that. And so purple is a good color for that. That's all. Plus, I like purple ties.
Sorry, I didn't give you
Tie.
a purple guitar pick. I have one other Milwaukee question that I overlooked here, but in Milwaukee and other parts of the country, the housing market is out of whack. In our market alone in southeastern Wisconsin, there's 5,000, the market's out of whack by like 5,000 houses that need to be on the market for it to have equilibrium. And a report this week said tariffs could tack on some $6,000 to the cost of building a new home. How long are people going to sit on their cheap mortgages from COVID? Thank you very much. And before they move on, before the market frees up.
So you have several things there. The first is we just haven't built enough housing, and we haven't kept up with the demand for housing. So there's an underlying shortage. Before the pandemic, there was a real housing shortage. And by the way, that's happening in many comparable democracies around the world. The second thing is, lock-in, as you say. There were very, very low mortgage rates during COVID, and people are kind of locked in. It would be very expensive to move, and that'll of course wear off over time. And you also mentioned, the costs of materials that might be imported, lumber and nails and things like that. And yeah, that and also labor, a lot of labor from in the home building business has been traditionally immigrant labor. So yeah, the housing, the sort of new build market, it may face some cost pressures as well. That may very well be the case. That's what we're hearing from home builders, for example, both on the labor side and on the material side. But even once these short-term things happen, we're still going to have not enough houses. And so it's all, I think for a long time, we're still going to see upward pressure on housing prices, maybe until population growth slows or until we catch up.
You mentioned that we're kind of in a period of waiting right now to see how policy ripples out through the economy. How long do you expect that to take? How long do you expect these big policy changes to show up in our day-to-day lives, in prices and supplies and things like that?
I mean, for a while, we didn't know what was coming on April 2. Now we know what came on April 2. We don't know. There's a lot more to be said about how all that shakes out. But we've come through that, and I think you now know that the tariffs are larger than people were generally expecting. That much now at this point. And you'll know more as you start to see the effects on the economy. So, as the months go by, it's hard to say exactly when you'll know, but clearly that learning process is ongoing. We're just seeing that these are new policies, not just the tariff policies, but the other ones as well. There'll be important fiscal legislation coming up fairly soon, and there'll be regulatory changes, significant regulatory changes. You have to really look at all of that to see what the overall effect will be. So I can't give you a date, but all of that is now kind of coming into place at sort of the speed you would expect policy changes to be, and then we'll begin to see the real economic effects as the year goes on. But again, I can't give you a really specific date.
Is the fiscal legislation the tax cuts?
Well, yes. I mean, I know they're contemplating, and we don't comment on fiscal policy, but what I read is that they're contemplating, making the Tax Cuts and Jobs Act cuts permanent, and also perhaps some other things as well. We wouldn't be. We have a sort of a placeholder for that too, but that's really not ours to comment on. But that's what I was talking about. Yes.
So I have a question from a friend in Milwaukee who said she has clients that have deals ready to go, businesses that are ready to launch from their garage to a private equity deal, and they're just stuck in their garage right now. How long do you think, what do you think the impact of the uncertainty these days will have on the private equity deals?
So again, we're hearing a lot of that. People are they're just kind of waiting for clarity. So, and I can't tell you when that will pass, but ultimately it will pass. We know that at a certain point we'll know enough to know what the uncertainty will decline, and we'll be able to see with real clarity what the policies are and what their effects are. So, you're right. We hear the same thing from businesses and from people that they're kind of waiting and seeing. There's a lot of waiting and seeing going on, including by us. And that just seems like the right thing to do at a time of elevated uncertainty.
What economic indicators are you watching right now? I mean, very famously, you look at the CPE and obviously the CPI and things like that. But are there any economic indicators in this moment, in these circumstances, that you are watching, focused on,
Sure.
interested in?
So the basic two big data pools are the data around prices and around employment. And we get in the employment area, we get just really that's an area where we actually get pretty good data. Although the survey response rates have been lower, nonetheless, we get a lot of different data. And it's not just unemployment, it's participation, it's by age group and things like that. It's wages, it's many, many different things. It's jobs, it's quits, all the job creation, quits, openings, all those things. So that's one thing. On inflation, we target PCE, personal consumption expenditure inflation, not CPI. And the two are broadly, they move they move together, but 25 years ago, the Fed switched to PCE. The public looks at CPI. It's kind of a little bit of a thing, but because we think, it's really just a better way to capture the inflation, the cost pressures that households and businesses feel. We think it's a better measure, and that's what we look at. But they're not that different. I mean, they look at different measures. Ultimately, they're pretty close together. Those things, on growth, you look at what's happening with consumer spending. The economy is overwhelmingly driven by consumer spending. So you look at how are consumer surveys, how are they feeling, how are they spending? Sometimes the surveys are very negative, but they keep spending. That's been happening really for a while. People spent right through the pandemic, and they spent right through this time of higher inflation. They kept spending, and forecasters kept thinking, like us, kept thinking that consumption would slow down. That's a really critical thing. After that, business investment is a big chunk, and you look at that, and that is also susceptible to sentiment. Businesses, if they don't know what to do, they're not going to do an acquisition. They're going to hold off on building a factory or a plant or hiring people, things like that. So we look at, I could go on for a long time. We look at a lot of data, and we try to make sense. We also talk to people who are in the real economy. I grew, my career was mostly in the private sector, talking to people who ran businesses. And for me, the story doesn't come together until I actually hear from people who are in the economy doing things and what they're feeling and seeing. And then it sort of fits together better.
This is like via the Beige Book, or just
Beige Book, thank you for mentioning the Beige Book. And I hope you read it.
I love the Beige Book.
See, that's great. Everyone should read the Beige Book. The Beige Book comes out sort of mid FOMC cycle, and it's all the 12 reserve banks and all of their incredible context, what they're saying about what's going on in the economy. So if you want to know, you can look at the national data, but if you want to know what's going on in regions and at different industries, you look at the Beige Book. So it's really a critical thing. And actually the reserve bank system that we have is an enormous strength of the Federal Reserve System. We have these 12 reserve banks with their own, economics departments and own participants on the FOMC. So that's a great thing to look at.
I'd like to ask you about another body of work that many of us know that you're familiar with, and that's the Grateful Dead. So, question for you, sir. American Beauty or Terrapin Station?
American Beauty.
Well, it's not even a
Not even
pause.
close.
That
Ask
was
me a
so
hard one.
fast.
Working
No,
Man's
that's my era. That's my era.
Working Man's Dead or
Yes.
Europe 72?
Oh, both. Yeah,
Come
that's
on.
my era. We're in the same era here. So that's, for me, it's late 60s to mid 70s. So
Touch of Grey, what do you think?
it was their only hit, but it's a good song. Okay. Yeah.
Finally,
Are we going to do this?
I feel like you're speaking another language.
there's a well-known Grateful Dead bootlegger who, with I believe the permission of the band, Dick's Picks, who's put
Yeah.
out. So what's your recommendation of those hundreds of?
I
Dick's
don't
Picks?
have any Dick's Picks. Like I said,
Come
my
on.
my real interest was late 60s to mid 70s.
Yeah.
And I saw them a bunch of times, and I know every note on every song from that era. But since then, I've been busy, actually.
Well, we thank you for taking time out of your schedule to join us here, and we appreciate your work.
Thank you very much. Thanks, everybody.
With guys, we don't break your
Well, the funny thing is your gate was so tight, most of that didn't even come through.
Now
So
we're whispering.
Now we're
to
whispering.
slowly ease into the volume.
there you go. Adjust your mics, guys. Yeah, so they ended with Jerome Powell as a deadhead.
Grateful Dead fan.
Yeah.
Not on my bingo card. I just tweeted that
Yeah.
out.
Yeah.
We do have some assessments from Kobayashi letter on the Fed trial, Chairman Powell's speech here. So if you're late joining in, here's a couple of the quotes. It feels like we don't need to be in a hurry regarding interest rate cuts. Someone in the audience said, really? He's like, yeah, seemed all excited
It was
about
the
it.
Interviewer, I think, said, really? Like,
Yeah. So I found that pretty interesting here. And I think we have here's the summary here. Tariffs are bigger than expected and risk higher inflation, slower growth. Too soon to determine the appropriate policy path. They're well positioned to wait for greater clarity. Tariffs could have a persistent inflation impact. Economic impact of tariffs larger than expected. Must ensure price hikes don't lead to ongoing inflation. And just minutes ago, we covered that Trump called on Powell to cut rates immediately. Things might get even more volatile, folks.
Yep. I mean, looking at the Fed watch numbers here, we could see that they were adjusted as we predicted here on May. They dropped from about 50% now to 32%. People going, okay, maybe it's not going to happen in May. June stays roughly the same though.
You gotta bring that screen.
I
back in.
gotta switch tabs here because
and the odds of no change increasing for May.
Oh my goodness. Here you go. Boom. There you go. So yeah, I mean, still expecting it's a 98.9 or 8% chance that we get that Fed rate cut in June. So June still looks likely. The takeaways I had from that primarily were what he was talking about in terms of unemployment and inflation. Unemployment's going up, and if the CPI data continues to show and inflation continues to drop, oil prices are down, grocery prices are dropping, and if these tariffs don't have an immediate impact on that, I still think we're going to see those rate cuts in June. It was also interesting though when he was asked about the real estate, he brought up lumber, and that proved to me something that Jerome Powell is not following the tariffs that closely, or there's just too much information because lumber is exempted from the tariffs in Canada. So it's that's not a material that's necessarily going to be affected in terms of the residential homes and supply that's needed. For example, in Wisconsin, like
it was the high end electronics lumbar. He's talking about lumbar chairs.
Lumbar
chairs. Like the lazy boy with all the electronics.
Speaking of, nobody even realized I upgraded my chair. I had to, after our last long stream, I was sitting on a crappy chair that was not made for a 6.5 hour stream. Had to go with the upgrade. So got the secret lab here now.
But that was interesting to me because it just goes to show. I mean, he literally just answered a question that he didn't even know the answer to. And
he
so
loves
I'm not going to look too hard into that, but I think it's also he just understands most of these tariffs are going to be negotiated. Most of them are going to be rolled out. And so they just need to sit and wait. And now you already saw Vietnam, you saw Cambodia. Multiple other people are coming to the table here to negotiate those tariffs down. And as long as we still have inflation, guys, continue to present. So if you're looking week over week, go look at your grocery prices, look at your gas prices. Since April, I mean, gas has been dropping, crude oil, like go look at Brent oil dropping. So that's all positive signs because what that's telling us as unemployment just had to tick up. If unemployment ticks up and inflation ticks down, that is going to confirm, and that is what the markets are pricing in terms of the Fed watch tool. That is what they're predicting for the June rate cut. So 31% of the market looking at a 50 basis rate point rate cut. I'm not on that side of the field.
So it's just to clarify, cash settled derivatives market, not so much a poll there. Nice clarification there.
Oh, for Fed funds futures CME market.
I do have poly market.
Cash settled derivatives market. I don't get why content people treat it like a damn poll. Oh, no, I don't treat it like a poll. If you want to use a poll, use Kalshi or poly markets, which is different. This is like literally your certainty of the markets. This is where you're 100% correct. So this is.
Now, I will say the odds of no change increased during Jerome Powell's speech for May. It does look like he's more comfortable waiting, as far as any kind of rate cuts. He's, we're in a good position to wait. And here you can see, at 1.65%, we were not going to get a rate cut. So meaning 1 in 3 chance we were going to get a rate cut. And if you see towards the end of his speech, as high as 75%. So it went from 1 in 3, we get a rate cut to right now about 1 in 4.
Yeah, the price in again is so I don't expect the rate cut there for May. I just don't. I think we're gonna see no change. I mean, it depends though. I mean, if the CPI data comes out absolutely incredible on April 10th, and that's 6 days from now. It's like the amount of negotiations that can happen between now and then also that can change a lot of the conversation here. Um, but either way, this is looking again, I think anybody that's looking at these markets, Bitcoin just ran up to 83.5 here. Bitcoin just it's honestly showing a lot of strength here. I mean, even though the SPX is literally in the gutter here, Bitcoin in the crypto market is showing a little bit of strength. So again, this is why I keep saying I think the light's at the end of the tunnel. We're at the bottom of this barrel. You're someone that's hoping for 77K. Let me just point something out to you. The SPX has dropped by literally probably 10% here, or 8%. Yeah, almost 10% in the last 2 days. Where Bitcoin showing a lot more strength, going from about $87,000. Right now, it's down about 5% from where it was, and it dropped all the way down about 7%. So outperforming the SPX here, showing a lot of strength. And if that couldn't pull down, Bitcoin to 73K, that bear case is just being much, much less likely. You also now have Jim Cramer calling for lower lows and saying not to buy right now. So that's some of our most
Buy signal.
opium buy signal you could possibly get.
Yeah, you also don't want to sleep on equities on the stock market that are Bitcoin based. I thought it was kind of interesting to see that we've got GameStop holding really strong here. One of the only stocks up today, hedge against the global financial system. GameStop running that strategy playbook. Speaking of Michael Saylor shared this. He should just change his name to Michael Strategy.
That's so true.
Bitcoin makes you the most interesting. So this is MicroStrategy, and then all the other Magnificent Seven. I think probably over the last, you probably cherry picked this data a little bit, but probably over the last year. But you can see Bitcoin related stocks holding up very strong. Bitcoin holding up very strong. Now, I will say there have been times in the past when the stock market dumped. Bitcoin seemed like it was, decorrelating, and then it did catch up a little bit later. And I think that's where you hear a lot of people calling for 78, 74, 72 type levels. But Bitcoin showing an incredible amount of strength recently. And it's, you love to see it. Love to see it.
Yeah, and comparing NASDAQ to MicroStrategy. So MicroStrategy trades on the NASDAQ. NASDAQ is now down about 4% today. And we go to MicroStrategy, it is only down 0.57%. So
There you go.
outperforming the market right there.
Half
You
step
guys
to your
ready?
left.
Or go ahead.
You have a half step to your left for me. Right.
Yeah, I had to move, man, because they had cord issues with the
Yeah.
headphone, but we are all good to go now. You guys ready to talk about some Cardano?
It is
Yeah.
freaking Cardano.
Charles, I'm talking about Cardano. It's okay. All right. Breaking news. Justin Sub Wallet. This is a wallet we have done a video on. This is a Polkadot wallet with 800,000 active users, 2 million installs. Integrates Cardano support, enabling a unified wallet experience across Polkadot, Ethereum, Toncoin, and Cardano networks. We said Gavin is in wolf mode, and here's just the latest upgrade, I would say, coming from just the Polkadot team out there. They're always building. Also, the Cardano Foundation launches quantum-resistant, interoperable digital identity platform. It's called Viridian. So this is an open source platform for privacy, and you might see this for payroll. You might see this for medical records. I don't want to get too deep into it because you can protect your digital identity through open source protocols such as the Carry decentralized identifiers. And of course, everyone knows about the AC/DC credentials, but backing it up a little bit, this will give users control over their data by enabling them to safely manage their digital identities, and is going to tackle the problem of centralized identity systems that frequently result in data breaches. So just think the users will own the data, so you won't have to worry about your social security number being given out. And we're not going to go there, folks. Don't worry. We're not going to go there. A couple other Cardano news. This is breaking. This is a altcoin we have talked about. I know me and TJ have talked about it before. Josh, I put this one on your radar. The Book Team. We actually covered one of their last events that they did last year. The token is called Stuff. They did a rebrand. So they have audio, video, they have books. This is the latest investor, Charles Hoskinson's family office. Ownership's a fundamental right. We've allowed it to slip away, says Charles Hoskinson here. And so this is now, TJ, the third billionaire, depending on Cardano's price, the third billionaire to be involved with the Stuff team. Checking out Stuff right here. So we have Charles Hoskinson investing in there. We also have a giant publisher called Ingram Content, one of the top 3 publishers in the world, and Mark Cuban And so now this is the Stuff.io billionaire investor lineup. And we've been trying to put this one on your radar for a long time. It was up 10%. It looks like maybe, let's hit refresh. Now it is up 16%. And so this is a token we've been telling you about for a while here. I would say pretty good market cap at under $15 million. So billionaires are investing in this one. You're probably not going to be able to get it for under a penny for long. Right now, coming in at 0.7 of a penny. To me, it's a pretty strong altcoin.
Yeah.
So
Great call on that one. That one's crushing it. So yeah, a lot. And I mean, a lot of stuff in the Cardano ecosystem. For whatever reason, it's not. You can trace it on the metrics pretty easily and kind of find, like what DZ just outlined right there, pretty compelling factors as to why to get involved in something that's a pretty low market cap. And you have you've had a very high odds of success in that ecosystem.
Yeah.
So if you guys aren't hanging out in the member stream, obviously we had this speech today, so we didn't do the typical member stream. You got a freebie. But if you guys aren't in there, this is the kind of stuff we're going to be sharing in our Discord as well. So DZ with the great calls as well as the great trades. So
and also I'll do some stock calls. I mean, I could share some of the stock calls. I got a couple stocks to throw to the Disco fam here. All right. So, we covered the NASDAQ, one of the worst days ever. In fact, I put out a short yesterday. It's one of the worst in the last 10 years for sure. And this is one of the last ones. Only worse drawdowns we've seen recently came in March 2020, around that area. And so if you look at the shorter time frame, the fifth bloodiest day yesterday. But tariffs, I'm looking at a couple stocks that are going to be beneficiaries. This is what I was saying yesterday. There's going to be losers. There's going to be winners. You have to identify who's going to be the winners in this uncertain time. We have trade wars. We have, tensions overseas. We're not going to get too deep into it. But I saw Tesla, opportunity in Tesla. We're going to look at this yellow line in a second. The reason I'm more bullish on it, American vehicles seem to be, they're just going to benefit from this. Not if your American vehicle is importing 70% of the vehicle from overseas. So I expect F-150s to get out of a lot of people's range. Probably going to see the same thing with GM trucks. 70% of the F-150 parts are sourced from outside the U.S. Maybe an American car, but it's made with parts from other countries. And so Tesla, if you've studied the automotive industry, Tesla has the highest percentage of parts made domestically. It's the most American-made car. And so if we see massive upticks in tariffs, Tesla's going to be the best position. So as far as car prices in 2025, 2026, I might see a lot more Tesla buyers. We do have a scary trend line below us on Tesla stock. And this is the area I'm just going to be a huge buyer. This is where I would load up, deploy a lot of the dry powder. You can see this trend line dates all the way back to March 2020. We were covering that here, dipped it, bounced, dipped into it, bounced. And so there might be potential for Tesla to go lower. So I just want to put that on your radar. Could fall another 25%. And that'll be around $185. I'm looking to load up on any Tesla stock under $200. Second stock I want to put on your radar. But first, any Tesla thoughts?
Well, real quick, before we go too far into this, I do want to welcome in our basement dwellers in the chat. We've got Drew waiting in the wings. I will go ahead and add him to the stage now. So we're all in the house here. So Drew, basement in the house. We're going to be finishing up some of these other stock calls, some of the stuff we cover on the stream. You're coming in a little bit hot.
Because DZ's a baller, stock caller. 20-inch blades on the Tesla Model Y. I guess it doesn't rhyme.
Wow.
All right, here we go. Last stock pick I want to throw on your radar here. Huge win for Palantir. Some call it Planetar. I'm just going to cut into the meat and potatoes. So the Army had a decision for Army Data Platform 2.0 program. And so they have the 1.0. It's just a big analytics tool, data sharing tool. They put the 2.0 program on indefinite hold. So what does this mean? The suspension of this program indicates a preference for maintaining the current system. Current system is called the Vantage system, rather than transitioning to a new platform, a new in-house platform. This shift positions Palantir as the likely exclusive long-term prime contractor for the Army's data needs. Now, I've listened to a couple podcasts of the Palantir co-founders. I've listened to Peter Thiel. There's also the other co-founder. He did some other podcasts. This is obviously biased information, but what they've said is the intelligence operations love Palantir software and they hate the old dated systems. It kind of makes sense. If you go to the DMV and you look behind their computer screen, do you think they're using the splashiest software? No. And so what was been suggested is, man, we had old systems. They really couldn't innovate. They couldn't really give us what we wanted. Palantir came in and built it for a year. Actually, the story is they gave them their first product for free to try to hook them. And so if we look at Palantir, it just got a huge bonus off of this. But Palantir just lost multi-month support here. This is going all the way back to August 2024. And the daily candle upon open was right on it and has now dropped support. So I would look for an entry point. We could go potentially lower, somewhere maybe bouncing off the 200-day EMA. I have seen people call for a head and shoulders pattern. I don't think we go that low. You look from the line. I mean, I don't see it going that low, but I'm a huge buyer if we get near this 200-day moving average. So I want to put that one on your radar tier. Palantir, Tesla, maybe in a good position over the next 12 to 18 months. There's a DZ stock picks.
There you go. Nice.
My God.
All
I'll say
right.
hey to Drew for a second before I go work on the video. Drew, how are you doing?
You know, I'm just living in the wonderful psyop of BlackRock and the powers that be, getting people to give up on this bull market before we even, we were going to get no tax on gains. There are no gains to be had right now. Kind of a weird world to live in.
Yeah. Well, we got all the losses to offset everything. So any gains we do make, we can just offset it by, hey, I lost all my money earlier.
It's true, man. And like I was talking to TJ and my wife about this, and we've also discussed this on the blockchain basement in the past. It's like now when we did see BlackRock open up those ETFs finally, we saw this regulatory openness for Bitcoin. It just dawned on me and BJ down here that there is no way on God's green earth that BlackRock was going to let us 4-year maxis out trade them. And I wanted to stick to the 4-year cycle as close as I could, but the more and more I see this chart unravel, the more I feel like we actually might see this run into 2026. I do feel like things have shifted in a pretty big way.
I would agree. I was long a believer September, October was going to be the top for Bitcoin. I would agree that I don't think that's going to play out. I think, they're probably going to be 6 months in either direction. If 6 months in this direction, that would maybe suggest 109 was the top. I'm thinking, I would agree. It's probably going to be pushed out 3 months, maybe 6 months from that typical 4-year top.
Right. And it's just, it's too easy of a win for us to have here in crypto. We're used to 4-year cycles. Then all of a sudden, now BlackRock's involved. Now nation states are involved. And it just didn't make sense to me to feel like we were going to just be able to easily dump, at the top, a historical top at October, November of this year, and then just rinse and repeat itself. And this I am taking as essentially a kind of like a sigh of relief. I know it's scary out there for everyone, but I have essentially just been very, very thankful to be able to buy good products at a low price again, taking advantage of the dip as hard as it's payday. I do feel like buying more. I saw Aerodrome is in like the 35-cent realm right now. And everyone was complaining because they didn't get into Aerodrome when we originally did at 18 cents. Now this is looking like another really good opportunity for it. So this conversation, Jerome Powell trying to, I want to kind of chop this up with you guys. Jerome Powell is trying to act like a stick in the mud. Trump's putting it out that, you have to cut rates now. Jerome Powell, hold up, wait a minute. There's a little bit of contention there. And many would argue, and I do feel like the Federal Reserve holds that Trump card over Trump, unfortunately, right? It would take a literal act of Congress and the Senate to cut off, what the Federal Reserve is doing. And so it's a situation where we're kind of in a rock and a hard place. We're talking about, the stock market having this massive pullback and essentially pushing a lot of value back into treasuries, and then kind of a forced hand cut by the Federal Reserve. I know you guys covered kind of the prediction markets. Many people are sitting here waiting for this, 3 cuts this year, or just this massive pullback on rate cuts. DZ, Josh, do you guys feel like they're actually going to show a sign of dovishness after the summer is concluded, and that's where we start to see the cuts, or are they going to have to hold them up?
What's that, DZ?
Never mind. Drew, I would say it is going to be hard to determine that. And I don't like number of cuts. I like the percentage. So if they come in with the 50 basis points versus 25 basis points, that's going to kind of change that math a little bit. And so I'm just kind of still just going with what Poly Market has been saying lately. I think they proved in November 2024, they've been pretty accurate, maybe one of the more accurate tools around. And so I would just say follow the money. And because the big money is betting on Poly Market, and these are people betting with their dollars, putting their money where their mouth is. So I'm just gonna follow Poly Market like a good lemming, Drew.
When I heard you trying to talk me into Tesla, you guys are unhinged up there. Unbelievable. Trying to get me off my Toyota maximalism.
You know you want to instigate somebody at a red light, Drew. You know you want to.
I will admit that's been tempting. DZ. This is you mentioned something very important. I think the lithium conversation, the raw materials, and the fact that Tesla is like one of the most American-made cars. You brought that up to me. It's very intriguing to me because I think about the amount of lithium that we can pull out of places like Utah, Nevada. We do have lithium available in the United States. It's just that there are EPA guidelines that kind of hold us back from the profitability of pulling it out of the ground. But then in my mind, I see these massive amounts of tariffs coming. Maybe we actually do get to see some opening up of our ability to pull those raw materials out of the ground for ourselves. It's not that we don't have them. It's that we just don't pull them. We'd rather have these things built in other people's backyards. And you guys covered some things. I think it was Vietnam Josh had brought up, right?
Yep. Might have been me, but
yeah, I mean, you guys were talking about that, and immediately Vietnam has that highlight where they're gonna
Nike stock too.
yes, the Nike stock, right? And this is something that's
Yeah,
a
it's
much larger
pumping.
conversation. It's like my dad was in manufacturing; he's an engineer for manufacturing. And when I see jobs simply be outsourced to China over decades' time, it feels on a family level like we're losing out to China on a multi-decade time frame. Now seeing that all of these companies that had fled the United States might be incentivized or forced to come back to the US, this is kind of feeling like short-term pain that'll last at least a few months for these companies. And it's just very interesting. This is kind of the canary in the coal mine to me, is seeing Nike being based out of Vietnam, president being forced to come to concessions. And obviously Nike's not a huge portion of their GDP, but it's a pretty good chunk. It's a big business to be based there. It
I
brings
have the
to
quote
mind.
from Vietnam's general secretary, and they said, quote, they want to cut tariffs down to zero if they're able to make an agreement with the U.S.
Absolutely.
Nike, I don't know how accurate this is, 500,000 employees in Vietnam.
Yeah.
So obviously Nike pumping off of that Vietnamese news.
That's
Yeah.
big stuff. That's big stuff. I mean, when we talked about, like, I don't want to say the world, but a global / ism, right? And we kind of intertwine, American companies, they leave America, they start setting up their headquarters, like let's say another company I can't really see on your guys' channel, PF Iser, right? They
You
moved
can
their
say
headquarters.
Pfizer. It's okay.
Okay, all right. Pfizer, they moved their headquarters to Ireland, right? And it made up a huge chunk of the economy. I had someone with out of Ireland talking about this. Is like, if that company had to up and leave Ireland and then come back to the United States, that's a huge chunk of their GDP. So I think that there's going to be concessions made. I think this is a necessary pain for us to go through. And you know what? Like, the market dynamics have changed anyways. We have to acknowledge that the market dynamics of the American person's ability to produce and work at manufacturing facilities has changed in a huge, huge way. And to see this, short-term pain, I mean, it's pretty incredible what you guys are talking about on the dynamics of how Bitcoin's and crypto's market is holding up in comparison to the stock market right now is something pretty incredible to look at. I mean, I have it on coin. I have kind of like an overlay on my screen here of what the crypto market looks like in terms of kind of like a block view. And we even have ridiculous things doing really, really well, like Doge, Pepe, Algorand. Like we have some deep green here on the crypto market. And then when you take a snapshot of the stock market, it's a much, much different viewpoint here. So
Oof.
it just like this is actually, I know TJ mentioned that, sometimes we see these decouplings, we're like, yes, it's here, and we're wrong a week later, and it ends up falling back into this. This is actually something that is highly intriguing to me, is to see our insulation from this 6%, 7% Nvidia pullback. And then, the king of crypto, Bitcoin, it's showing up by 0.73%. So when I'm looking at the general Bitcoin market and, well, crypto market, I call it a Bitcoin market sometimes because Bitcoin's still the king of this. I'm really seeing multiple attempts to break down below this 81.2 fail. I've seen Bitcoin prove 81.2 time and time again. I've had a lot of fun trading off of this basically mid 81 level. And the only reason that we lost this is because China decides to try to play hardball with us in terms of these tariffs. So we lost a lot of ground, but honestly, we're trying to make that ground back up already. And these are the kind of zones that I love trading, where I feel like in general, we are in just a overall bull market. I think that this bull market, this is on the monthly for Bitcoin. I think it's going to be extended, but the overall structure of it, when all the dust settles in 2026, is going to look pretty similar to our past one. It's just a longer extended process with a much higher market cap. And where we're stumbling right now, I think I talked about it before, but it is below these previous bull market levels. So like, in 2026, beginning of 2026, I'm looking out for about 170 to 200K. But this is where, like, when I see the pullbacks on, let's say, Aerodrome or Chainlink hitting that $12 level, I am taking as much advantage as possible of these things, because like if this is the bull market, I mean, we showed it yesterday, but the RSI is pathetic. Like if this was the bull market, the RSI is not showing that this was the bull market. I'll show why. Is because each historical bull market that we have in Bitcoin, it goes up into this hyper extended green zone all the way up to about like 89. These tiny little blips are what we've had so far. And honestly, like I wouldn't be surprised if we see the swoop down and then start to chunk back up and really hit that crescendo in 2026. I don't think the end of 2026 is reasonable, but January, February, March, that's kind of like my time frame where I'm looking for this RSI to basically stable out and then start to move back up to the upside. So I'm thankful for the pullback. And really, like, how I live my life, it is already in line with higher prices buying American goods, because I put my money where my mouth is when it comes to that. I support the US economy anyways as much as possible, and it costs more. I put the money into it, it costs more, but I know that the value that I'm putting back into, like, literally Paulding County is going to be more direct to my neighbors. So, if everyone's going to have to go through the short-term pain with me, sorry, but not sorry. It's kind of a brutal sentiment that I have about it, but this is the short-term pain that I'm happy to see us go through, because my family's from manufacturing, and I've saw how much thievery China has done to us in terms of our intellectual property. And it's been an aggravating situation for me to grow up seeing. And I really, really feel like this is the time frame where we could potentially see that sovereignty return to not only the American, hopefully the American dollar with the Bitcoin Reserve Act, but also the sovereignty of our manufacturing industry, and stop being so beholden to these Chinese manufacturers. Because think about it, if we actually went into a conflict, then we're reliant on them for all of our raw materials. Absolutely. And shout out to Crypto Billy about the blood in equities and crypto, where millions are made. And TJ had a great post about this on the Discover Twitter this morning. It's like, this is where we know to go all in, just highlighting products of strong value. It's got Bitcoin, Chainlink, Aerodrome. I don't think Coinbase is done by a long shot. And I think what we saw in kind of the clearing of the path for the base ecosystem in Coinbase against Binance is just the beginning of what's to come. The US is not going to give up on being a dominant factor. Another great quote, from TJ is that our biggest export is the dollar. And this is why we see Chinese goods sold in the dollar across the world. On the, World Wide Web, they're still selling product for the US dollar because that is still the king. And seeing these moves by Trump, crazy. A lot of people are calling that, Trump supporters are silent right now. And yes, I'm a supporter. There's things that he could do that would make me not a supporter, but
Bro, we're live every day. Who's Trump supporters are not quiet right now. They're doubling down.
Right.
That's coping. That is liberal coping mechanisms right there. It's,
it is.
it's insane to even hear that. But when you're looking at this is what we voted on. It sucks. This is not easy. We did not expect the amount of tariffs and everything. But what I'm looking at here is just the SPX comparable to Bitcoin. Look how resilient Bitcoin is comparable to the SPX, which is bleeding right now. But going back to the Nike conversations and everything as well, is these tariffs we know this, guys. We've been saying this for days and days and days. I mean, actually, let's go. You know what? Let's look at this. Let's do tariff. I think I could search it from my thing. Let's go to. Let me pull this up. Give me 2 seconds. I'm going to find a tweet real quick.
Yeah.
Trump's, I think it's planned. Where's that special tweet we have? This was the prediction from, I think, beginning of February. Let's go to, here it is. Trump strategy: place tariffs, crash markets, increase USD value, cause trade war, negotiate historical trade deals, reduce tariffs, cut rates, back to QE. I'm going to repost this. Back to QE, take credit for booming markets. Does anyone else see this coming? This is playing out perfectly. Sometimes I wish I just did not think markets would crash this bad. It's pretty insane to me that I see the amount of bearish recessionary economists come out of this and where's the manufacturing going to come back? It's all right, do you guys not know about automated factories that are being developed right now, or
Right.
the semiconductor investments that are in the trillions of dollars coming from TSMC? It's the expansion here on the long end just makes sense. And so the short-term volatility, it's tough. This is tough, but this isn't as tough as what we've been through. This isn't, we've seen Bitcoin drop by 60, 70, 80% in the past. Bitcoin's not down by 60, 70, 80% this cycle. Altcoins are definitely being obliterated, being hit pretty hard, but still up from what we bought in the bear market in 2022. So it's it's a tough time, but the plan is obvious. Oil is down. Treasuries are down. Why are treasuries down? Because everybody that was telling you the US dollar was going to collapse is doing the quite opposite. Everybody is buying US dollars, and demand is coming into the US treasuries, which is why the yields are dropping. So yeah, I mean, everything you just said, I pretty much agree with there.
Well,
Drew.
there's
I'll cut
something-
you off, TJ.
Go
No.
ahead,
I
TJ.
didn't say anything. I just wanted to pop in because you were saying, this is painful, but what I appreciate about it is it's a lot more honest than what we've been. Because you know what else is painful? The doubling of the money supply every 4 years, every 8 years, and you just don't feel it as fast because all assets pump. So the rich that hold a lot of assets, the smart investors like people who watch this channel that hold Bitcoin, that hold stocks, they don't feel it as bad because their portfolios get the juice. But the everyday person who's earning, the person who's going to the grocery store, the experience everybody was having for the last several years of runaway inflation at the grocery store, runaway inflation on your insurance, seeing all of everything that you need to survive, prices doubling and tripling while your pay was going up 5% if you were lucky. A lot of people were getting 2 to 3% raises. I mean, I know a lot of people in my day-to-day life who nothing really effectively changed over the last couple of years except the fact that they went from drowning slowly to drowning quickly. And that, unfortunately, is the reality we've been living in when you have to print more and more and more dollars to survive. But when you're printing all those dollars, you see asset prices rise oh, look at the stock market. The economy's great. Everybody's doing great. But in reality, people are struggling out there. Now, the everyday person is being told, oh, you're going to struggle more. You're going to see worse inflation really, really fast. But they haven't really felt it yet. The people that are feeling the pain are the people that have fat asset portfolios. And so for the first time, that's what I was saying earlier in the stream, for the first time in a long time, we've got a president that says, you know what, I care more about the person at home, the everyday person who's having to try to survive on a regular income, and you're not getting a 30% raise every year. You're not able to just go in and you don't run your own business, so you can't just go increase prices. those people, those wage earners, the backbone of the United States and the people that do most of the actual work, those are the people that have been struggling. Those are the people that have been feeling the pain. They don't feel this pain of what's happening right now in the tariffs. It's the people with portfolios that do. And so as more time goes by and these things, all these policies kick in, the treasury rates come down, the Fed rates get cut, all that stuff will balance out, and we will get the relief we're looking for as, investors. But the good thing is we're actually, for the first time in a long time, trying to put the brakes on just insane money printing, because that was the alternative. If they didn't do this, the alternative was to essentially double the money supply again, and that was going to cause insane inflation. In the time period between when they have to do these massive prints is getting smaller and smaller, and the amount they're having to print is getting more and more. And what we would have experienced was hyperinflation, runaway inflation, and a true economic collapse like we've seen in Greece, like we've seen in Argentina or Venezuela and many other places around the world, where you've got people carrying this stuff around in wheelbarrows and it's essentially useless. And that was the path we were heading towards if somebody didn't do something. And so for the first time, we're saying, no, we're gonna take some short-term pain so that way everybody doesn't get devastated, but I look good for 3 or 4 years. Like
100%.
It's a beauty to see what's happening, and it's good. It's intellectually honest. It will. We're moving away from Keynesian economics to Austrian economics. I keep saying it on this channel over and over. If we can get into the Austrian economic mindset, that is how you succeed over the long term, which says you are not insulated from pain. You need to save as somebody, and you need to be prepared for market downturns, because it can't be up only forever, and you need to be prepared for it. Keynesian says print, buy, consumption. And there's a reason they push that and have been pushing that since the 70s. It's failed and failed and failed and failed and failed and failed. And all they do is go back and update the textbooks. All they do is go back and update the models. So finally, we're heading back towards sanity. Hopefully it sticks. Yeah. Sorry for going off.
I know. I just realized my hair is curly right now. Gosh, that's not normal.
Because is APAC funding you or something all of a sudden?
There's something beyond that. I think we've touched on it a few times, but it's the refinancing of the $7 trillion of debt, right? And if they had to refinance that $7 trillion at high interest rates, that's where that bubble burst potential comes in that TJ was just talking about, where you keep kicking the can so far down the road. Eventually you kick the can, you realize there's no ground under you, and you fall off of a cliff. So refinancing the debt, we did see $1 trillion of it had to be refinanced in March. And that was a time frame where, I was pretty sketched out, but I do feel a sigh of relief that I know why Warren Buffett is $300 billion heavy in cash previous to this. We were all wondering why Warren Buffett was unwinding Berkshire Hathaway stocks, why he was, going into Domino's Pizza, ownership. It made I mean, at large, I knew that there was some level of pain, but it makes a lot more sense why Warren is sitting on that amount of cash
Still
to
the
buy
greatest
this.
investor.
He is incredible. And,
Yeah.
the inside info, the guy's plugged in. He knows where things are going. But it is relieving to finally know what kind of pullback he was looking out for. And honestly, looking at the SPX on like a much larger time frame, we might not be out of the woods yet. Looking at this general SPX pullback, this data goes back to, let's go all time actually. All SPX
I love this
here.
comment here. You guys are oxymorons. LOL. Money printing bad. Can't wait for rate cuts. You realize rate cuts aren't printing money?
No.
Nick, do you know that cutting rates doesn't equal printing money? I'm very
I think they've made it confusing.
not
on
the
purpose,
same
though.
function.
Right. But
Rate cuts just makes it cheaper to borrow. That is literally
they've
it.
made 3 different or 4 different mechanisms of money printing. And so
Love you though, Nick.
I think that they make it confusing on purpose to people so that they think, that rate cuts are just flat out money printing. They think that bank term funding emergency programs for banks are, money printing. They're very, very different. But on the SPX, I would put an air of caution out there that there might be, because historically we've seen I think it's up to 30% pullbacks. and we are
Mhm.
right at about 20%. So with that being said, like, yes, buying the dip in general over years time frame always goes good. But we might not be out of the woods yet on the pullback. And honestly, like, we have months and months of negotiations to go through. I mean, Josh, we've already seen Vietnam do some concessions, right? And hit up Trump. Trump mentioned that nearly every country on that reciprocal tariffs list has reached out to the United States White House to negotiate a deal. Do you think that this is a process of, renegotiating and setting up the deal that can be solved before summer really kicks in? Or are we going to have to watch this unfold over the next few months here?
I mean, I think it's going to take through May at least. I mean, I'm literally not changing my prediction on the June rates. I think we've hit that on the head. I think we've nailed it with the economic data points. We're in a strong economy. We don't expect them, we expect the reduction in rate cuts to start occurring when unemployment starts outpacing inflation. And if inflation continues to drop, unemployment just went month over month.
Mhm.
That's the indication that you're going to see that rate cut actually take place. And that's where the money starts pouring back into the private sector. It becomes easier to borrow. You're going to see more incentivized in terms of job hiring, et cetera. So that's like the rollover period. I think just like you saw Vietnam and Cambodia and multiple other countries come out in the last 24 hours in response to these
Mhm.
tariffs, you're going to see it happen pretty quick. But what I'm really most excited for is just the refinancing of this, because people are like out here thinking like we don't want inflation. Like, again, you said it's very complex. We don't want inflation that is outpacing the overall amount of income the United States is like
Right.
producing. So if we are printing too much, if inflation is too rampant and we are borrowing more, that is going to cost you, the taxpayer, more dollars. So for example,
Mhm.
the US 10-year treasury, if we're able to bring that down to a 3.5% yield, the people out there are like, are you guys voting on 401ks crashing by 10%? You guys do realize, even though that is, yes, you're 100% right. That is $1 trillion in value. That is being wiped out, for example. The taxpayers on a debt of an interest payment of 4.5%, that's going to cost us hundreds of billions, if not trillions of dollars. And then on top of that,
Mm.
if we don't solve any of the government spending, if we don't cut the deficit, if we don't cut the spending, it's going to only compound. So now when we go refinance the debt again in 4 years or whatever the time frame is, now all of a sudden, instead of paying $1 trillion per debt, it's going to be 2 trillion, and it's going to
Right.
keep compounding. And so we have to stop that. I pulled up the national debt chart here just to show you guys what we're talking about. What we're not like, the inflation's not going to go anywhere. Money's always going to be printed. The Fed is clear. They have a 2% target. That is not deflation. Nobody is saying these numbers where you guys magically say, oh, you guys aren't for inflation. Like, the Fed's target's 2%. We know there's going to be inflation. What we need to simply do is start being able to actually have more revenue generation coming in so we can pay off our debts. Or else your 401ks, cool, good for you. Be greedy. Your kids, your grandchildren aren't going to have 401ks. You know what they're going to have is an endless amount of debt that they have to pay off, and the trillions of dollars as the dollar value starts to just completely be decimated on the global market scale as a reserve currency. So there's so much more, like you said, to the conversation. It's very complex. But we're going to see more money printing. But what's bullish about this isn't the money printing. It's going to be the releveraging of the private sector. It's going to be the manufacturing and the jobs and the wage growth that comes with that and is established in the United States over the next 6 months to 2 years. We've never changed this. This is not something we're, being an oxymoron or anything. Like, this is what we voted on. This is what we've been expecting. This is what we want to see come out of these markets. And that's just going to flow back into your crypto markets as risk on assets start to be readjusted. And Warren Buffett is, famous for saying this. He's in short-term treasuries right now. He does not believe he's going to stay in short-term treasuries. So I wouldn't be shocked if you saw in the next 45 days to 90 days, you started seeing Warren Buffett start, buying stocks or purchasing or whatnot. Maybe not. Maybe he's 100 years old and doesn't give a shit, and he's going to let that go to the next president of the company. But, we're at that point where now there's this massive discount on the markets. Inflation is dropping. Unemployment is ticking up just a little bit, but we expect that to honestly be countered with the manufacturing jobs that come out in 6 to 12 months. And this is a really bullish time for our markets. I'm very optimistic over the next 6 months here. Of course, though, we can have a pullback to 73K. Of course, maybe there's uncertainty for the next month, but I honestly think it's solved within April. I think with the economic data points coming out, if the CPI report comes out bullish and inflation drops month over month,
Yeah.
again, we just had unemployment rise. That's going to give Feds the indication that, okay, this is the path towards rate cuts. Now, the only outcome where I see this not taking place is that somehow there is massive inflation received from these tariffs month over month, and we start seeing that in May. And we just have to kind of be patient with that. But I've already seen the media way exaggerating the tariffs. Like, for example, they were literally talking about semiconductors and lumber, and it's like those were
Right.
literally exempted. So it's definitely,
Right.
we have to just be patient on those data points as they roll in.
Well, the media is also, I mean, there's so much that I want to back up on because like the Doge department had found that there's thousands, if not tens of thousands of people that were receiving benefits from the government that were over the age statistically of 130 years old. Right. So what are we like? There was literal ghosts receiving our government money, and yeah, we were on pace to run out of Social Security regardless. So this is something that when we're talking about seeing the cost of living outpace, our income, it's been exponential. Like we're not too far. I think the average earn or average wage in the U.S. is somewhere in the $50,000 to $60,000 level. If you back that up to let's say the late 1970s, you're at average earning of about $20,000, but your home was $50,000. Now, your home on the average is $450,000. The average person is being shut out of the dream of owning their own home in an exponential manner. And this is where I see companies like Frontier Partners, one of the largest single family investors in the country, and Blackstone now leaning into Section 8. They're banking on the fact that you're going to become poor. And this is where the whole idea of finding an asset class that can hold our value at the same rate of inflation. And so we can actually have a chance at buying a home at some point. If you're in the lower middle class and you're seeing this dream of buying a home slipping from your fingers, how we catch up to that dream and how we grasp that home is through owning Bitcoin. And I've never been more bullish on the outlook and the longevity and the use case of Bitcoin until now, seeing a literal strategic reserve rolled out for Bitcoin. It's happening. It's being talked about on a state level in a very tangible way. And those states are going to, in my opinion, beat the Federal Reserve to the punch when it comes to actually beginning to purchase these Bitcoin strategic reserves. And these states are talking up to a 10% allocation of their state treasuries into Bitcoin, which is it's an ass load of money just from the states. Then we talk about the United States then coming into the picture. This is where the change in market dynamics cannot be ignored. It cannot be ignored. And the short-term pain, I see it like there's people in my chat, global recession, Bitcoin's going to 15K incoming. Like I continually hear this and it makes me laugh because we are at max fear, but also looking at nation state adoption for crypto at the same time. This is the psyop of these massive market manipulators and controllers taking the Bitcoin from the little guy and putting it into the big guy's hands. So for the brave, they're able to hold on to their Bitcoin through this uncertainty. I'm of the opinion that it's going to be one of the most sought after asset classes over the next century. The whole world, our entire economy is moving to a digital sphere. And Michael Saylor has tried to make this clear, but it's ownership of digital cyberspace, Bitcoin. Not only does it add to our nation's national infrastructure for digital security, but also it's going to allow a tangible backing of what's going to back the US dollar over a longer term time frame, thus, in my opinion, giving the US dollar a longer lifespan as the world reserve currency. A lot of people have been sitting here on the sidelines cheering on BRICS to dislodge the United States from its dominance. That has failed. The US dollar is still at all-time highs for usage, even though we have the DXY pulling back, a little bit over the last few weeks here, or maybe week. It's really still the king when it comes to currency. So I really don't think that. And some of the chats are just so ridiculous. Like people feeling like Trump has fled us all. He is literally leading into this is when you're a parent and you have to cause some pain by taking a product away from your kids that you know is bad for them, right? Let's say, for example, letting them watch ridiculous things on YouTube. You know that it's like those shorts of the monsters and things like that that they share to kids. You take that away from the kid because you know that it's bad for them in the long term. And yes, it causes some short-term anger. Causes some short-term instability in the home. But in the long term, it's worth it because their attitudes are better. They're not reliant on ridiculous info-less garbage they're not gaining anything from watching that. They're aggravated when you do it, but in the long term, it's better for them. This is just life lessons, and I'm honestly like the people that are calling for the end of the bull market usually don't have their money where their mouth is. They usually don't have any active shorts. They usually aren't all in tether. You know what I mean? They're sitting here holding on to the asset while calling for lower lows and an absolute cataclysm in the market. Then put your money where your mouth is. Like that's where it's been. I've been on the side where I've leaned into these products like Bitcoin's not a product. It's this amazing form of money that we have now. But Chainlink is right behind that. And really like the outlook for Chainlink in terms of altcoins, I think is a much longer outlook than a lot of these altcoins that we see in the top 100. If anyone goes to the top 100 list of 2017 or 2021, you'll see that a lot of those products don't exist anymore. So when it comes to those, when you hold altcoins, even when you're buying this extreme blood, you're going to look like a fool for a long-term time frame until a few months come and absolute parabolic moves happen for them. Please, for the love of God, exercise the ability to take those profits and put them back into Bitcoin, put them back into real estate, things of that nature that hold their value for a longer term. And I know, Josh, you and you and DZ go back and forth about ADA quite a bit, right? ADA, I feel like is one of those long-term products or, cryptocurrencies. Me personally, it is a chunk of my portfolio, but for this cycle, I'm still eyeing for ADA to be able to break out of its previous all-time high. The psycho hands, never discount the power of a cult. I will say that. A cult that's building a technological product on top of that. So I do feel like we're going to be hitting above previous all-time highs for ADA. But Josh, we've had to make concessions quite a bit about the power of XRP's cult as well over the past few months here. So I'm sitting here looking at XRP with a 2.1% pump, or it's at $2.11 rather. It's a 6% pump. So I'm looking at this. XRP is one of the largest market caps in crypto. We see XRP's made moves to integrate and be part of Ripple, part of the Ondo ecosystem. Ondo is one of the best things that I've been looking at in terms of an altcoin. Do you see XRP? I mean, and this is a very serious question. Do you see XRP with the tangible ability to flip Ethereum's market cap?
No.
What makes you think that? Because ETH has fallen.
What makes me think that? The
XRP's
fact that they
growing.
had to integrate RLUSD to Ethereum to get access to liquidity.
Based.
Yeah.
Based. Based.
Which has absolutely zero effect on the XRPL, just so you guys know.
Right.
Now it's not discounting what Ripple's done. People are gonna be like, oh my God, Josh is a little bit retarded, so whatever you want to say, let me know in the comments. But no, it's, Ripple, like as a company, I think should IPO. I'm a huge fan of Brad Garlinghouse. I'm a huge fan of David Schwartz. You guys know this, that I've studied pretty much everything they've done. Always, David Schwartz goes back to like the cypherpunk days, dude.
Yeah.
They've been huge innovators in the crypto market. Now, Chris Larson, on the other hand, donating to Kamala Harris after being royally railed, almost worse than the market conditions we've seen over the last 2 months with these tariffs. That's personal politics, personal biases. But the XRPL, like when you look at the development, your institutions, your banking giants, BNY Mellon, they're not going to use the XRPL. They've announced this at the Ondo Summit when we were watching the Ondo Summit with Chainlink. And Ripple had executives there. They're all building their own private layers because why wouldn't they? Why are they going to just get on their knees and give up all of this potential value and these transaction values, et cetera, not just build their own system and give it to a company that owns 50% of the supply of a network? The XRPL is going to do great. I think they got a great cult-like community, but the development is pretty much non-existent on the XRPL, other than Ripple. If it wasn't for Ripple, XRPL would probably be worth maybe $100 million. And maybe it'd be worth a few billion. Maybe you don't agree with that, but I'm sorry, it completely relies on Ripple as a whole. And so, Ripple as a company has been doing phenomenal things. They're cross-border remittance systems in Southeast Asia. They're massive. 95% of the clients are outside the United States. I would love to see them develop and work more in the US as we see the deregulation take place. And I'm very, very excited for that. What's the price point on that? I think a Ripple can compete with a MasterCard, a Visa one day, a JP Morgan one day. These are $500-600 billion market cap companies, guys. And I do believe Ripple can obtain that type of value. But I don't know what happens when the Ripple IPO stock comes out. Are people going to rather invest into Ripple? Is Ripple stock going to perform better than the XRPL? Those are other questions and concerns I have. So, like overall, I'm optimistic on XRP. I think the XRPL is going to see upside in that volume. But to replace Ethereum, I think Ethereum is going to be worth over $1 trillion. And I don't see the XRPL competing with that, especially as we move towards a world of tokenization.
Are you feeling the $1 trillion mark? Because I agree with you. ETH will hit $1 trillion, but when? Because I think it's an immovable object. It's really
2 years.
integrated. You're thinking 2 years?
I think, within 2 to 3 years, everything's going to be tokenized. Real world assets, it's coming now. Tokenization's happening now. Every bank's hopping on this. Let me pull up rwa.xyz, right? I've been covering this website since it launched.
Yeah.
And this thing was it was like $100 million for total RWAs on chain. Almost what was this? We've been doing this for 2 years now or so, chat. Maybe not even, maybe just over a year. And so we've watched this absolutely explode since 2023. We were here before this giant uptick. So this would have been 3 billion. No, this would have been 2021, 2021 when that came out. US Treasuries came out probably, I think, January last year. Yeah, we're looking at day one, $100 million here with US Treasuries. So, the total value, look at that, up 50x in 1 year. And I'm expecting this to only skyrocket up to 50 billion by the end of 2026. I think you're going to see
concept. It's really the concept, not even just the particular products within this, but it's the concept of the US government being able to offload treasuries by leveraging the power of crypto, and that concept. It's a very new one. But when me and you first saw this, it was kind of an easy play. And you're bringing up something very, very interesting to think about. Like, let's say, Ethereum continues up from these RWAs and the shift to these and the actual implementation of it, because we're right around the corner from Paul Atkins being put in place as the SEC chair. That's coming up. I don't know if it's going to be this month or next month, but I feel like we're just a few months out from Paul Atkins taking over that spot. This got me thinking. I was in and out of Aptos a little bit for a little bit of a move, but Aptos is now, what is this, like $4.81? Some of the best investors I know, some of the best blockchain sleuths I work with have been highlighting the transaction throughput of Aptos. The ability of it is absolutely ridiculous. It's looked like it's gone through 3 bull markets already, and it's only been out since 2023. This shows a very, if your theory about Ethereum even is close to being true, we're talking about a completely broken bull market structure. We're talking about an extended slow grind up and to the right, which is terrifying for people that don't have positions.
Yeah.
Right. That's terrifying for people that don't have position in the market. It's also terrifying for people that take those profits a little bit too early. But this concept has to be looked at pretty seriously. Now that we look at Securitize, Biddle, Ondo, and then now Paul Atkins coming into place at the SEC, and a tangible look at what it would look like to put Wall Street on the blockchain. This is insane amounts of value. This is kind of terrifying in a good way to think about, but really it's it's a subject matter where it's like, this is where I've decided to pare down the positions to, obviously Bitcoin kind of for the family legacy side, but Chainlink, Ondo, Aerodrome, I think is still going to be quite an upsetting to the upside project. And at these levels, 39 cents, I got people in my chat asking about it, man. Like, I recently bought it at 50 cents, and I do feel like me DCAing today Aerodrome and bolstering my bags would feel pretty good. But now I'm getting FOMO about Aptos as well and Sonic. I've seen a lot of TVL kind of get swallowed up by Sonic. So that's just what it is, man. And these time frames where it's like the market is in this, I don't know if do you have the fear and greed index on your side? Because I have the general fear and greed on Coin Market Cap is showing insane fear right now. I mean, we're coming up to like, what is this? Pull this up. It's
Let me pull it up here. Yeah, I got
pull
you.
it up. Pull up on your side because yours always seems to be more accurate. I always feel like
It
it's
is.
worse.
We
than
use
this one.
it's because we pull a bunch of different fear and greed index indicators and aggregate it at once. So it's real
Gotcha.
time. It's up to date in real time. That's why you can actually use the 15-minute, the 4-hour, the 1 day, etc. So right now on the daily here at this given moment at 1:07 p.m. it's a 43 fear. And let me refresh the what you got to do here is you just go over to our heat map. And by the way, FOMO's getting a huge rebrand and update here very, very soon, guys. We've been grinding for like literally months and months and months and months. Have some pretty big investors, and I literally just had the most exciting texts of my lifetime here. I think just go through, and I can't wait to share with you guys what we've been building on here because a lot of people out there that think we're partisan or MAGA or whatever it is, man, just in which I have a lot of the alignments there. We're seriously about to break the internet here with what's about to happen and really, really help everybody from a bipartisan perspective. This is nonpartisan, in my opinion, with crypto. Crypto should be adopted by both sides. It's for the retailer. It's for you guys. And I'll be explaining that here soon. But yeah, we're at a 24 in the 24-hour. That means, let me click on it one more time. Yep, we're on a 24-hour extreme fear here on the 24-hour time frame, which means maybe the 4-hour was the 40. Yep, there you go. So this is why I love using this metric because you can even use it to the 15-minute time frame. And like if you're trading with like little scalp trades on the 15-minute, we're a little bit greedy, right? So you can use it in many different ways here. But if you're bullish or bearish, this is our FOMO score. Our users today, which we have hundreds and hundreds of active daily users, our users are at about 50-50, which usually is kind of like, oh, we're consolidating. So I love using this tool, and we're actually, the new update's even going to be more in depth with this tool. Be a little bit more accurate because this has been kind of a sticks and stones website. But the new widget system and what we're building out is absolutely incredible. And you guys will be able to customize your own dashboards and integrate and use really, really cool tool sets that haven't existed on the market. So really cool place to be and just use these. And then, of course, I also like pairing the fear and greed index. So, for example, we're on the 4-hour time frame right here. Let's go to the 12 hours. Still a little bit fearful. We have liquidations all the way up to $83,991 and even up towards $85K. So for me I love trading liquidations because essentially what I'm looking for is like, okay, the one thing I could trust market makers to do is manipulate the markets. And I'm sure a lot of you guys watching and there's manipulation. Wall Street manipulates, market makers manipulate. And so if they're going to manipulate, they're going to do what causes A, the max amount of pain, but B is the most profitability outcome. And at least they're more likely to, they're more inclined to. Will that happen every single time? Not necessarily. But the majority of the time, this is why I trade those liquidations swings. And of course, we also use signals and other platforms that will be integrating and building into the APIs and the widget systems that you guys will be able to use. I like to see those, those imbalances on the market. So where in this liquidity, for example, these are little support levels. I'm on the 5 minutes, so take this with a grain of salt. On the 4-hour, it'd be way different. The most amount of interest is going to be at $82,740. So this is where I might open a long because we're in a trading range. And so I love trading these liquidity ranges and just watching prices bounce in between them. And this is what I'm trading off of. Now, you can also use this on a long time scale. Okay, so if I go to 6 months, this is why I'm incredibly bullish. Anybody that's not bullish, I think is absolutely wild. You can see the bright yellow line. It's very simple to read these charts, guys. The brighter the color, the more likely you're going to move to that price zone with Bitcoin's price.
And especially on Binance too. I mean, Binance just sources these out like a shark through Wintermute. Like that's
100%.
It's very important to understand.
Which is why I wanted to show the $110,000 level, right? There's a lot of bright liquidity up towards that range. And liquidity down here may never, ever fill. It just, over time, as you just see prices keep moving up and ETFs are filed and liquidity levels are turned into support regions, you use these as your support and resistance levels. So if you go to the year time frame, they start disappearing, right? Because in the 6-month time frame, now with all of the adoption, the amount of accumulation, this is the perfect example right here, right? So when we went down to what is this? This is $30,000. So this was $30,000. This is mid bear market. Liquidity was opening up massively above 70K. As soon as we broke through that 70K level, we came up to it, and then now it's kind of acting as pretty significant support at that 70K region. And so this is giving me that that confidence, that liquidity and adoption and demand is just going to push those prices up further in the long term. And it's also going to make it really incredibly hard to break below that 72, 73K level.
Well,
There you go.
I am noticing, like, I mean, again, I already mentioned it. Like, these are my favorite places to take trades at, and I've been having a lot of fun scalping it. Honestly, man, like this market right now, seeing this, I mean, I don't want to enter the trade right now. I'm assuming that we're going to have a little bit of a retest down in this kind of 82 zone. But I feel like putting another one out. Like I had one yesterday that went great. I think the other one was on Monday, I believe. It was back here when we had this huge scam wig. This is on Bitstamp. It was only on Bitstamp when I saw this, but really like seeing this strengthen it in Bitcoin particularly, and then pairing it with this massive pile of blood and hate. I'm feeling a lot of confidence. Like this is a haircut that everyone knew was coming. Everyone's calling for the next Great Depression. I don't think we're quite going to get it, but I think what we're going to see, I feel like, is just a shift in finance, and this is why Frontier Partners and Blackstone are leaning into Section 8, because you're going to have more people that are going to be unable to keep up with the rate of inflation. And that's the whole goal that I've had in crypto, is to outpace that inflation and to kind of better the family's buying power, be in a better spot for it. So with that being said, I really feel like what we're talking about is, in the short-term pain, yeah, it looks bad, but it is kind of terrifying for me to think about not being able to use the 4-year cycle, just rinse and repeat again, like we did last time. This used to be so easy when you could just put a pin, in the map at the previous all-time high, or, and really expect like the chop there. This is a situation where we're rolling into, the next 4 years. We're going to have a different administration in the next 4 years, obviously. But if they put these guardrails in place for a Bitcoin Strategic Reserve Act, the real fear I have is that we don't return back down to these recent highs, the $69,000 level, and that our point of support for Bitcoin is much, much higher than that. That is like the ultimate fear for me. So with that being said, I've learned to just DCA the max pain.
I would even say my ultimate fear is we just go up from here.
It's
Because,
up only
dude,
as max
90% of these people, like, chat, I'm going to ask you right now, chat, to all the bears out there. When was the last time in history when markets were crashing, like buying the bottom of the dip? When was it ever easy to buy that crash? 2007, 2000, the 1970s, even when we had the pullback in 2022.
March 2020, right?
When we were just here, COVID-19. Like, it is never easy to buy the dip. And that is just the problem here. Is like, and I truly believe this is going to be a much more V-shaped recovery dip. Not as quick as obviously COVID, because we printed $7 trillion, but a pretty quick turnaround within the 3-month time frame here. And if that's the case, the problem is now everybody that was telling you to buy the top that finally flipped bullish after we went past 75K, they're now the ones that are trying to tell you to flip bearish at 80K and tell you to buy at $50,000 and $65,000. So the max pain is going to just come from this. And I've seen this with so many creators. A lot of the creators that I saw, so many content creators that started selling their Bitcoin at $15,000, at $17,000. Some of the best creators. And it's just like they fell into the fear mongering, and then they literally sold them within weeks later at 25K, 30K. And then they're like, no, we're going to go back down again. We're going to go back down again. And then they just never dollar cost average. And this is why time in the market always beats timing it. And to people that are acting like, Trump hasn't fulfilled the promises, you guys got to remember, since election day, we're still up from it's Bitcoin's still up. Now, obviously, all coins getting freaking absolutely destroyed. And I'm not saying this is easy. I'm not saying that we predicted that properly. But, the outcome of the tariffs, like everything we've been talking about with the manufacturing, bring inflation down, energy costs coming down, deregulation coming, Bitcoin strategic reserves, all of that is upside in the long term here. So my biggest worry, Drew, is that we end up pumping from here, and 90% of retail doesn't end up dollar cost averaging because they're too scared, because they fall for the fear mongering media, because they listen to creators the same creators that told you would never pass 30K, never pass 50K, never pass 60K, never pass 80K. The same creators all over again, and then they just miss out on the entire
Well,
rally, and they just
and
buy
one of
back
the
into
most
the top.
aggravating things that I see out of creators in crypto, or really anyone that's on the charts, is like they don't have truly a solid path on where they think things are going. They basically just set the long and the short term mindset. They paint that picture so that they can sit there and dance on the hill and brag when either option hits 3 or 4 months down the 3 or 4 months down the road. What we're talking about is a concise opinion on where we think the markets are going. And honestly, like, I dealt with the same thing when the blockchain basement started. We were at 15K, and a lot of people were calling for 10K, even 3K. And we're like, no, the cost to mine Bitcoin at the time sat at about $19,000, $20,000. Like, $15,000 is an insane deal. We're buying it, even though everyone that says they're so much better than us at charts tells us we're going to 3K. Disagreed flat out. I have clips of it. I sat there on the operator chair. I was like, no, this is the bottom. And we put tons of money into the market at $15,000 Bitcoin. I did the same thing when March of 2020 came around and we hit $4,000, and people called me an idiot. I was being mocked by people that were my friends, and I still get calls from them. We crashed from 100K down to 80K. They get the call over to me, how's Bitcoin doing? I'm like, it's at $80,000. You remember this conversation 4 or 5 years ago when it was 4K and you were sitting there mocking me for buying this internet funny money? It's hilarious money now. And the fact that we can call a move from $100,000 down to $80,000 a cataclysmic crash is laughable to me. The real power, and really why I know Bitcoin is going to last so long, is because we can self-custody a decentralized system that's based across the world. It's making monetary systems have to mold into. If it was up to the existing central banks that are out on the planet today, they would have taken Bitcoin out of the picture immediately. They would have been able to stop it because they don't want a competitor to the current system. The fact that we can hold this on our own cold custody systems and they can't get it, they could come and try to force it out of us. And a lot of people wouldn't even know their seed phrase. There's nothing that you can force out of people. It's a system of consent, a system of transparency, and that is the literal only reason that we've made it this far. And I think we have so much further to go. So, I think today the philosophical approach to Bitcoin, not only the technicals that you just talked about, which are great, I think the philosophical approach to Bitcoin is going to matter a lot when we see this fear level in the 24 while we're sitting here bouncing around in the mid 80s. Like, I am not worried about this at all. I'm honestly really excited about getting a long position in. I'll stop scalping over the next. I mean, I kind of am at the point where I feel like Bitcoin's going to absolutely go berserk and bounce back up to 90. And I want to have the longs in place for that moment, because that's where things can absolutely get crazy. It'll leave people alone. Once the bears start acting cocky and, Jim Cramer comes out and gives us that confluence, that's when I know it's time to get good. So, and shout out to Meanless in the chat. I think we're going to have some basement dwellers, we call them, down here, join us on the show today. Well, not today, next week. And we're going to be bringing a lot of really good guests over the next week. I don't know if you noticed, Josh, we're starting to bring in a lot more people. I figured out how to get people to call in. I even might open up a call-in section for the crowd.
We should do that. I would love to do that with you.
Right?
That's 100% we should. I've been trying to get a call-in feature this entire time. Like,
We
I want
got it
people to
figured
come
out.
up, debate, have these conversations, how do we do that in StreamYard?
Yeah. And you know what? Aaron would be this is Aaron in the back would have to be kind of like vetting them, or maybe we do like some sort of vetting process to make sure that they're not Nancy Pelosi with a mask on, maybe, or something like that. But maybe that would be fun to have Nancy on. But I think that would be a lot of fun to have a call-in system set up for people to be able to call in, and maybe it could be a crypto confessional. You know what I mean? Or just crazy stories in crypto. I think that that'd be quite a bit. And Deucey does bring up call-in feature is probably easiest in Discord. That might actually be a interesting approach too, because I know we're moving a lot of comms over to Discord slowly. But yeah, man, like I think that
Should be launching soon.
Aaron's terrified. Look at him. I got him in the background, dude.
I'm excited for it. I would love to have guests on, and I'd also just love to have other people that are disagree with us just come on and have open discussions and
Yeah.
debate. I think it'd be very healthy because a lot of people out there like disagree with us. I love to disagree. Like people are like, there's trolls in the chat. I love the trolls. I want them to come up and have conversation. My favorite type of trolls are like, and maybe not trolls, but people that just don't agree with me. I mean, there's like Crip Lulu and a lot of people in chat here. Like it's like, come up here. If you don't agree with me, come up with data points and let's discuss it, right? But instead of doing insults and saying you're wrong, it's like I want constructive reasoning, an actual dialogue. That's only how you get through this. I mean, Jerome Powell just said they have no idea what's going to happen. The world's leading economists are sitting out there. I don't know what's going to happen. We have to sit and wait. We have to sit and wait and say, maybe tariffs work, maybe they don't. And so if you guys want to make it in this cycle, like the one thing I know for a fact is that you need to be here every day. We need to be researching. We need to be consuming as much economic data as we could possibly get if we want to be able to access this, new financial system. This is like we're actually witnessing a financial restructuring of entire Wall Street, tokenization, real world assets, Bitcoin outpacing, the SP 5, becoming a store of value, becoming a medium of exchange, becoming a unit of account. Like this is a historical moment, and it's shifting a lot of our data points. And so you just have to be here. Have those conversations and just get ready for whatever is thrown at us in these markets here. Right now, though, I do want to pull up the chart. SPX here down, hitting a new low today. While, again, Bitcoin, this is really cool to me, $83,300. SPX is dropping, but Bitcoin is being absorbed. Volume's coming in very, very strong. And this just, again, just supports that case. Like, I mean, if we were to see 73K Bitcoin, I think it would have had to have followed the SPX here in the 10% sell-off the last 2 days. But instead, Bitcoin's been holding this range. And that's very strong validation of this key range and this key level for Bitcoin's price action. That just playing into the guys dollar cost average, and we might drop another 10%. Who knows? We can't predict that, right? We can't. I don't have a crystal ball. I was gonna make a dirty joke, but I don't have a crystal ball we can rub. We can't see into that future. But what we do know is try to make the best possible economic assumptions or educated guesses off of what the Treasury is telling us, what the Commerce Secretary is telling us, what the negotiations are telling us, what's the long end of this, rather than focus on that immediate short-term volatility, because that's just what's going to wreck the investor. That's what gets you the most emotional. So if we could try to strip those emotions away, if we could try to be objective, I think that's going to just be ultimately what allows the most amount of people to win here in the future. And I think objectively right now, it is the best time to dollar cost average.
Do you have the SP? Let's look at this. Look at the SPX or the SP 500 right after this, because it is just like this might be the biggest decoupling signal I can remember seeing. Seeing this pullback on the SPX and then Bitcoin being so flat like that.
What are people mad about with the SPX?
It's essentially like, I mean, I have it on my screen here as well, but I mean, in general, just over a few months' time, it is down. What are we at? 16.2%.
Yeah.
And this is
Nasdaq's
why I was
down
like,
further. I think Nasdaq's probably like 20% right now. Let me see.
is it really? Let's check it out here.
Good Nasdaq composites.
USDX.
Yeah, just pull that out.
Woo.
NDX.
Jeez.
NDX.
That is a big pullback. I mean, this is
Mm-hmm.
this
And
is actually
Bitcoin's
feeling
holding
like
against it.
a tangible decoupling, right? I mean, it's scary to say, but like this is very
It's too early to tell, but it is very strong. Seeing there's a lot of very, very, very strong indicators.
Right. God, crazy times. And really, like, everyone's upset. Jerome Powell, he's flexing a little bit on Trump, I think, with that conversation that he had. But regardless of what Jerome Powell is saying, the M2 money supply has already been on an uptick back to the upside. And we looked at, there was like a 72-day lag.
Breaking
comparison.
news.
What do you got?
Oh, we should watch this together, dude. No,
What do we got here?
Tucker Carlson just interviewed Scott
Oh,
Bessent.
let's do it.
Are we doing this?
Yeah. Well, I mean, it's a whole hour, but I mean, I'm kind of interested. Yeah, let's do it.
I want to do it. I'm going to do it.
Crank it up, though.
Here we go. Here we go, guys. The United States Secretary of the Treasury, Scott Bessent, says Bitcoin is becoming a store of value. Man, oh man, dude. Man, oh man. Here we go.
See if we got it.
Do we have audio? Okay. I'll switch over to the audio real quick. Stop sharing, present, share screen.
Yeah. Tucker, I wish I had my
Bev.
Tucker Carlson shirt on today for this. I didn't know this is coming.
Here we
Should've
go. I
worn it.
didn't either. This is amazing. Let's do it, baby. Lock in.
So we're at the Treasury Department. President had a press conference yesterday.
And just tell me when to
next
pause
door,
if you want to react.
in which he announced a whole new tariff regime global. He'd been promising to do this, well, for 40 years, really. It came not out of nowhere, but it
And actually, let me really quick, guys. Sorry, I'm going to share the entire screen so I can pull up the chart and watch it as well with you guys.
Mhm.
Sorry, TJ.
Ah, that'll be funny if it starts pumping
clearly
with
his
Tucker.
intent all along, as stated.
That's the wrong one.
You sent me into the Matrix with that one.
I just
Unbelievable.
sent you guys in the tricks. There
I
you
feel like I'm
go.
about to watch a
Boom.
Bitcoin movie.
I'm
But it
so
did
stoked,
rattle
dude.
people, including some of his supporters. So I just wanted to ask you, big picture, where do you think this leads?
Well, Tucker, and thank you for having me. And as you said, the president's been talking about this for 4 decades.
Yes.
And this is transformational for the American economy, for the American worker, and for the new Republican alignment. And it's a combination of the old and new ideas. Some of the old ideas were put away. I always tell everyone, and they don't want to hear it, the original tariff man was Alexander Hamilton.
Yes.
And he used tariffs to fund the new nation and to protect American industry. President Trump has added a third leg to the stool, and he uses tariffs to negotiate.
Yes.
But I think this is not unlike, I was a freshman in college when Ronald Reagan came in 1980, and new day in America. And when I talk to people now and they look back and they look at the Reagan years so fondly,
Yes.
I remember what it was like, and it was choppy. And the president,
Very choppy.
very choppy. President Reagan stood the course. And look, this is not an invitation, but at one point in the early 80s, a farmer showed up with a shotgun at the Federal Reserve
Yep.
to
they talk
kill
fast.
Paul Volcker for raising rates. So, like I said, that's not an invitation for
Of course
anybody
not.
for action, but it was a tough time. And then in 1984, President Reagan won re-election with 49 states. And I think they may have even let Mondale win Minnesota just so it wasn't a skunk.
Just to be nice. Yeah.
Yeah. And that's what President Trump is doing now. For years, the American worker, middle class has been eviscerated. American workers have taken it on the chin. And we're just starting to see some of the research now. Like, we're seeing research on what's called the China shock from 2004. It's just coming out now. And it's what it's what I know. But finally, academics are saying, oh, the American workers never recovered from the China shock. What a surprise. And President Trump sensed it 40 years ago, but out in the campaign trail, starting in 2015, up until last year, he has promised the American workers that the old standard of living can come back. And because what we've seen over the past at least 20 years since the China shock, but more like the past 30, are these massive distributional problems where the coasts have done great.
Yes.
And the middle of the country they have just seen quality of the life expectancy decline. They don't think their children are going to do better than they are. And a lot of people don't care. And President Trump cares, this administration cares. And this is the first step towards realigning that. A lot of our trading partners, including some of our allies, have not been good partners. If tariffs are so bad, why do they have them?
Great question.
Why do they have them? Right? Or if the American consumer is going to pay all the tariff, then why do they care about tariffs?
Right.
Because they're going to eat them. So I think that this is the beginning of a process. We're going to reindustrialize, that we have gone to a highly financialized economy. We have stopped making things, especially a lot of things that are relevant for national security. I think one of the few good outcomes from COVID was we had a beta test for what maybe a kinetic war with a large adversary could look like. And it turned out that these highly efficient supply chains were not strategically secure. so that we don't make our own medicines, that we don't make our own semiconductors, that we don't make our own ships anymore. So I think if I were to say, like, was there any good outcome from COVID? It woke the world up to these supply chain problems. So economic security is national security. President Trump and I have talked about that a lot. So this is a national security issue that we're seeing here, but it's also an economic security issue. And it's to, I don't want to say redistribute, but it is to give working Americans real wage gains and enhance their lives. And I've said out on the campaign trail, one of my most frequent mottos was, Wall Street's done great. It can continue doing well, but it's Main Street's turn. It's Main Street's turn. And that's what we saw yesterday. It's Main Street's turn.
So over the course of my life, 55 years, Wall Street really has been the commonly recognized measure of economic health. Like, how's the Dow doing? We've got entire TV channels devoted to tracking its progress, which has mostly been up during the course of my life. So if the average of, the equity averages fall, if the stock market falls, that's seen by a lot of people as like a measure that the economy itself is in decline. Do you think that's a fair measure?
Look, the market goes up and down. Warren Buffett has a saying, in the short run, the market's a voting machine. In the long run, it's a weighing machine. And in the long run, it's going to weigh, do we have good policies?
Yes.
And I in my former business, I commented on market structure, market ups and downs a lot. I'm trying not to do that.
Yes.
But for everyone who thinks that these market declines are all based on the president's economic policies, I can tell you that this market decline started with the Chinese AI announcement of DeepSeek.
Right.
So the so-called Mag 7, the tech stocks, had been doing very well for about 18 months, led the market. And I think that there was kind of a real dose of reality in what was going on in AI. And I think U.S. is going to remain the leader in AI, but the AI-related stocks started coming down. So, like, if I were to analyze in my old hat, and this is the only time I'm going to talk about it, my old hat, what's happening with the market, I'd say it's more a Mag 7 problem and not a MAGA problem.
Right. So it's a deeper, so actually the markets are, you're saying in this specific case with tech stocks, are taking like a real measure of the value of companies relative to foreign companies.
Well, it's that. But if we look, with the equal weighted S&P, even after today's move, down 4% in the year. Or, in a long-term chart, you wouldn't even notice that.
Yeah.
And I think the most important thing that we can do, that I can do as the Treasury Secretary, that President Trump wants to do, is put in sound fundamentals for the underlying economy. And if the underlying economy is good, if taxes are stable, if businesses have predictability, if we have cheap and plentiful energy, if we deregulate, if we treat our workforce well, then we're going to have a great stock market.
Fair. The president suggested in describing his plan for tariffs, he said, look, you could conceivably fund a lot of government with tariffs. And that would suggest that taxpayers fund less of the burden. And so do you expect that these will be accompanied by a congressionally approved tax cut
I like
for
their mics.
the middle class?
Todd, I just want to go back for a moment too, that one of the things that the tariffs are doing is we are pushing back against other economic systems. So the Chinese have a very different economic system. They have low cost, some would call it literally slave labor. They subsidize industry with subsidized loans. They have a lot of non-tariff barriers. Your show can't be shown there.
Yes.
So we're pushing back against that. And with the tariff income, it can be substantial. And if we think like a classical model of tariff income would say, if there's a 10% tariff, then the currency would appreciate about 40% of that, so 4% of it, then the producer in the other country would eat about 4%. And then the US consumer might have a one-time price adjustment of 2%. So, in a 10% tariff, maybe the consumer pays 2% of it. We saw there's a study out recently from a group at MIT that shows that with President Trump's first China tariffs, which were approximately 20%, the price level went up 0.7. So to answer your question, if we could put on a 20% tariff and have the foreigners pay that and use that money to bring down our government deficit and keep taxes low here, that's a very unique formula that hasn't been tried in this country for a long time.
And do you think, but it would require congressional participation to get there, to move tax rates, of course, are set by the Congress.
Well, what we're going to have now, we are in this very odd, what I would call betwixt and between the tariff income and what DOGE is doing in terms of the cutting government expenses. So CBO scoring, and for 35 years, I was on the other side of the wall, and I would always, CBO says this. And I didn't really realize that kind of CBO scoring is a lot like Enron accounting, that it's not real. And when you actually look at the real
But
scoring,
you assumed it was on the outside?
Sure. Well, they're experts.
It's a congressional budget office.
It's a congressional budget office, and they're well-intentioned people. They just have the nonsensical rules.
Interesting.
Think about this: when all the scoring's done over a 10-year window.
Yes.
Okay? So they just assume 1.7 or 1.8% economic growth over the 10 years, and that never moves. Whether you raise taxes or cut taxes, doesn't move. So that's what during the campaign, when Vice President Harris was announcing all these big tax increases she wanted to do and things like that, that the CBO was scoring her very well. And President Trump wants to make the 2017 tax cuts permanent. That was kind of a blowout number, because
84K,
obviously
baby.
growth's going to go up a lot when you cut taxes. So, but that was a long way of saying we will not get credit for the tariffs in any bill, because Congress is not going to legislate it. President's doing it with executive authority, but the money will be coming in. We've already taken in several $100 million on the China tariffs from his first term. We take in about $35 billion a year just on the old tariffs, not on the new ones. So in the CBO window, that's about $350 billion, which pays for a lot of the president's promises on no tax on tips, no tax on Social Security, no tax on overtime, making interest deductibility on autos made in the U.S. And think what the president's doing here. He is backing into an affordability solution for the bottom 50% of wage earners, because they're the ones who will benefit from all four of those programs.
So looking at, say, a year from now, so beginning of next April, do you have any sense of how much the U.S. government anticipates bringing in from the tariffs announced yesterday?
It's going to be a moving target,
For sure.
But could it be anywhere from $300 billion to $600 billion a year? Sure.
Okay, so that's meaningful revenue.
Very meaningful. But what will happen with tariffs over time, the ultimate goal of the tariffs, and the president says it all the time, bring your factory here. That's the best solution toward getting away from a tariff wall. So move your factory from China, from Mexico, from Vietnam, bring it here. So what will happen over time, we'll have substantial tariff income in the beginning. Manufacturers will build their factory here. The tariffs will drop, but the revenue from the factories, from income taxes, from all the new jobs will go up.
That's crazy. It's almost like he's validating everything we said.
Domestically as the tariffs drop. And why are the tariffs dropping? Because we're making it here and our trade deficit's dropping.
So you've obviously thought this through. You think that the United States has the necessary labor force for this transition?
I think we do. I think with AI, with automation, with so many of these factories are going to be new. They're going to be smart factories. That I think we've got all the labor force we need. And what we are doing on the other side, one of the reasons, other than my support for President Trump, that I came out from behind my desk, and I had a pretty good life, and I wanted to come out and really tell people that I was worried about an impending financial calamity, given the high levels of government spending that were leading to high levels of government debt. So what we are doing, on one side, the president is reordering trade. On the other side, we are shedding excess labor in the federal government and bringing down federal borrowings. And then on the other side, that will give us the labor that we need for the new manufacturing. And we're going to relever the private sector. So the private sector, in essence, has been in recession during the Biden years. And this is an opportunity to right-size the federal government and unleash the private sector again, because it's been hemmed down by excessive regulation and it's been crowded out by the government.
This is interesting. He's gonna do an ad, so I knew that was coming. Guys, this isn't live. They just posted the recording here. I don't know if it was released last night or earlier today or right now. We just saw it go live. We immediately started watching it. But to everybody that's like not one, there's people in the comments that are like, "Why are you watching this?" It's like, because it's a U.S. treasurer. It is our U.S. Treasury Secretary. Like you need to listen to it. But dude, it's everything we've been saying.
Well, and he said some pretty important stuff about how they obscure the data, right? And not only like highlighting what recession is.
Well, they've lied about inflation 1,000 times. The Biden administration literally tried redefining the definition of a recession. In their
didn't try. They literally did it.
They literally did. And it's like, what? People just want to ignore that? Are you guys like just forgetting everything that the same economists, the same people that told you all the lies about COVID, all the lies about Hunter Biden, all the lies about the recession, all the lies about the private manufacturing jobs in 2022. Now you're trusting them that we're entering a recession today. Like all the people that remember inflation was transitory. Remember when inflation was transitory? It's just astounding to me now that now everybody's like, oh no, those people are correct. They were correct all along. The people wearing masks, driving cars are the one telling you that we're entering a recession right now. But
and just we've been sifting through all this macroeconomic data and honestly the reality of our situation. And meanwhile, my chat is arguing about emu wars in Australia. So
I saw that. Yeah.
Pretty wild. Pretty wild. Hopefully they
need to make a Netflix documentary on it. If you guys want, there is a war in Australia. That's the only war I support.
Oh my god.
Yeah, that's quite crazy.
We're pumping pretty good though.
Yeah, I mean,
gosh, we have more of that to watch, but I mean, now Bitcoin's getting up to kind of a previous shelf zone here at 84.2 currently. We did tap 84.4 essentially. God, I mean, this market is just looking.
Well, I can't wait. We haven't even gotten to the point where apparently he talks about Bitcoin being a store of value, and it just goes to show, like, again, this is. Like it's weird how there's all these expert economists, like our Treasury Department, which isn't just Scott Bessent. There is thousands of workers a part of these agencies that are all working on re-leveraging the private sector, driving down our deficit costs through other agencies or third-party platforms that were hired by the executive branch, like Doge, and at the same time save the taxpayer a ton of money off lowering interest rates. So when we refinance that debt, it's not as large of an economic impact. And then again, everything we're talking about, tariffs aren't meant to be here forever. They're just not. Like, and the ones that there will be tariffs that are forever. There'll be like the reciprocal outlook of that, but it's to re-leverage the private sector. So over the 6 months, you see that teeter-totter start to balance the other direction. And so it's really cool. I mean, I love listening to these things, and it's very, very important that we do as well. It's why we listen to Jerome Powell. It's why we listen to, Secretary Scott Bessent. It's why we listen to Howard Lutnick. Like the administration, everything they've said they're going to do, they have done. Like it's not like they're like coming out of left field going, oh, hey guys, all of a sudden we're doing tariffs. It's like they campaigned on all of this. They campaigned on driving down the deficit. They campaigned on cutting the government spending. They campaigned on bringing back, the jobs to the states. And so it's, it's just like you have to listen to it. I don't know what it is. Is it just people that are they ignorant? Is it TDS? Like, is there a reason why you guys won't listen to the Treasury Department? Is that like where's the disconnect there?
It's a breaking of previous reality, and we get told, like, just for instance, the amount of federal workers that Biden hired was helping hoist up the job numbers, right? And so the reality that they were existing under the Biden presidency was that the jobs market was looking great, because look at how many jobs were added. Lo and behold, a large percentage of those were federal workers. It's a breaking of that reality, and it's a kind of a shift in having to stare at yourself honestly in the mirror is difficult at times. When we realize how much waste there has been, how much you have been stolen from, like how much money has been literally just taken from you and sent to, I don't even want to go into the studies that Doge stopped, but I mean, absolutely ridiculous waste of money. It's difficult for people to look at that in an honest way.
Well, it's also difficult to engage in a conversation that utilizes constructive reasoning. For example, like Legend here, this analysis sucks and is cringe. Can even make it past 5 minutes. And like, I have nothing against this comment whatsoever. But like, rather than giving constructive feedback, there's this immediate attention to insulting that I think it's just leveled in mass because they have
your Tesla.
They have no data.
Fact. You drive a Tesla.
They can't be wrong, so they insult you even if you're right. And it's like, okay, if you don't agree with me, like it's like it's so immature. If you don't agree with me, write out a data point, right? But no, instead it's no, they're just stupid. They're just stupid. It's crazy,
it's a write-off. And some, I want to get back to watching the rest of that, because you're right. We haven't gotten to the store value, but one thing about what's coming is the $5 trillion in investments into America. I've highlighted on the basement a job sector that is underserviced in the United States that I think people can print a lot of fiat doing is electrician work, certified electricians. Holy God, we are pumping right now.
We are pumping 84.5. I thought we were supposed. Drew, I was told I sold everything in short. I was told we were going to 73K. I was told. Where is my recession? Where is
that's
it?
no big deal. That's no big deal. Yeah, but I want to listen to this. Let's listen to more of this guy. This guy's going to run the show here.
The effects of these policies that you have. We've got probably 1 out of 6 people in this country here illegally, maybe 50 million illegal aliens, and the president said he wants to deport them. Then you have AI. And the projections there are massive labor market disruption. Fewer people needed. You alluded to that a minute ago. Then you have the tariffs, and like we can guess is their effect, but we don't really know because we've never done it. And then you have the reaction from the rest of the world to those tariffs. Like there's so many huge factors that are effectively unknown, that are black boxes. Really, do you ever think like, wow, it's kind of hard to know what's going to happen?
Look, it is, and I always think that you can never be 100% sure, but you can stay within side of guardrails and keep moving forward. I can't remember. One of the Sunday morning shows I was on a couple of weeks ago, the commentator asked me, she said, "Can you guarantee me there won't be a recession?" And I said, "I can't guarantee you anything. There's nothing that tells me there should be one." So I believe that this is going to work, just like President Reagan believed that supply side economics was going to work. But what I do know, that the old system wasn't working.
I think that's right.
And if you look at a system that's not working, you got to be brave to change it. So what wasn't working? Would it have been really fun for me to come in and just keep issuing a lot of debt? And it's almost like a bodybuilder is taking steroids. Outside looks great. You're muscular. Inside, you're killing your vital organs. That's what was going on here. But it would have been easy to keep pumping up the economy, borrowing a lot of money, creating a lot of government jobs. There was no controversy when we're doing all that. But you were going to end up in a calamity. If you go back and look, you look at the financial crisis in 07, 08, economy looked great right up until then. You go back and you look at the end of the dot-com bubble and then the whole credit problem with the fraud at WorldCom, Enron, some other companies. Economy looked great until it didn't. And I think one of the things that we won't get credit for, but that this administration will have done, is avoiding a financial calamity. Think about it, that they've done an analysis that one of the reasons 9/11 happened because the airlines didn't want to pay for reinforced doors.
Yes.
They kept pushing back. FAA didn't push hard enough. And now, we've got the reinforced doors. So I look at it, we're putting on the reinforced doors before the crash.
What's the scramble, the lobbying scramble by foreign governments going to be like over the next 3 months? Because the president said yesterday, we're putting a universal tariff, one standard, but then of course each country's adjusted according to a lot of different factors, trade deficit, currency manipulation, regulation, and then tariffs. But, this is all, as you said, a moving picture. It's a developing situation. So like, if pick a country, Vietnam, China, I'm going to really try to bring pressure to bear on this administration to adjust those numbers. Like, what's that going to be like?
It's going to be the president's decision. And I think his view is this has been going on for a long time for friends and foes. And we're going to see where this plays out. I think what's going to be more important than the discussion with countries is the discussion with companies. Mm-hmm. So what do companies want to do? As President Trump said yesterday, best way to get around the tariffs, build your factory here.
Yeah.
And what can we do here at Treasury to help that? We're pushing to get the tax bill done so we can guarantee the low taxes, full depreciation within the first year. We're working with Secretaries Burgum and Wright on energy security, and we're working on getting the regulations down. The president, I don't know whether he talked about it yesterday or the day before, Taiwan Semi, largest semiconductor manufacturer in the world, Lee Zeldin, the EPA commissioner, is working to push through all the permits that they need because we've just gone into this regulatory morass where it takes so long to get things done in this country. So I think what will be more interesting are the individual company announcements more than the country announcements.
You want to sell to Americans, you got to make it in America.
Sure. Or pay the tariff.
So how is China as a nation going to, this is such a big challenge. It's directly in their face. It's about every country on the globe, but it's really more than any other country about China. I think it's fair to say. How are they going to respond? What's their retaliation look like?
Well, I don't know if they can retaliate for a couple of reasons. If you look at the history, and I used to teach economic history, and when you look at the history, we are the debtor nation.
Yes.
We have the trade deficits. The surplus nation is in the weaker position because the Chinese business model, and Tucker, by the way, the Chinese business model and the economy are the most imbalanced in the history of the modern world. We've never seen anything like this in terms of their export level relative to their GDP, relative to their population. So I think it is going to be very difficult for them to try to change the model. They're in a deflationary recession/depression right now. They're trying to export their way out of it, and we can't let them do that. But I think that when you think the Chinese manufacturing system is like that old Disney movie with the brooms carrying the buckets.
Yeah.
There's nothing you can do. Like, that's their business model. It's not going to stop. Now, what could happen if you were to say, Scott, what's the dream scenario? That somehow there could be a deal where the U.S. and China, we want more manufacturing, which would mean a smaller part of the economy's consumption. The Chinese have this imbalanced economy with too much manufacturing, and actually the Chinese consumers really get the short end of the stick. So Chinese households, they're called in what's called the middle income trap. That could we do something together to say, okay, you rebalance, you consume more, manufacture less. we are going to consume less and manufacture more, and we'll be military rivals. There'll still be an economic rivalry, but we're going to level the playing field by a lot. Now, that's not going to happen tomorrow. That's not going to happen in a month, but over the next few years, they may have to come around because I think their business model is broken. I think President Trump's broken their business model with these tariffs.
So you're describing, the famous scenario where if you take a bank loan, the bank is in charge. They can repossess whatever you borrowed against. But if you take a big enough loan, you're kind of in charge of the bank.
Exactly. And they've just got such a big deficit with us that
they need our markets.
They can't survive without them.
Are you confident that there's like a clear enough channel of communication between the two governments that the details can be worked out and that nothing will go crazy in the meantime?
Well, I think what gives me a lot of confidence is the relationship between President Trump and Chairman Xi.
Yes.
That when you have a direct line of communication at the very top, then I think it's very difficult for things to go haywire.
Interesting. What about the rest of the world? What about Europe?
Look, the Europeans, we look back and there was the famous meeting where President Trump told the Europeans, you're insane for building Nord Stream 2. What are you doing? You already get most of your energy from Russia and you're going to double down on it? And they did. And look what happened. Yeah. So
we blew it up.
Somebody did. Somebody did.
Probably Putin.
Oh, damn. Some Norwegian fishermen bumped into it, is what I read. But the Europeans go kicking and screaming, but I think they're going to have to rebalance too. Germany has a very imbalanced export economy, and they were on the verge of deindustrialization. They were the opposite of us. They had expensive energy.
Yes.
They were depending on Italy and the countries in the South to keep the euro suppressed, and they were selling into China, and now China is becoming their competitor.
So you said at the outset, the first example, the analogy that you used was President Reagan's first term. Obviously big win in 80, recession of 82, wipeout, and then like the biggest landslide in history in 84. So you're suggesting by saying that the fruits were obvious within the first term, within 4 years.
They were. Only difference now is there was a lot of competition back then, but there's a level of civility.
Yes.
And the real danger here, if there were a midterm loss, and I don't think there has to be, what's going to happen. I know what's going to happen. Democratic House is going to go immediately to impeachment for something.
Of course.
Right? Like the lawfare is going to start again.
Yes.
And I think the American people are going to hate it again. So Einstein's definition of insanity, doing the same thing again and again and expecting a different outcome.
Do you think that, and this is really aimed at the people who support President Trump and who agree with you wholeheartedly that the current system was really bad, and like drive across the country, you'll see how bad it has been. Horrible. It lowered life expectancy. But the people who are hoping that yesterday's move will lead to a demonstrably brighter future within 4 years, is it your sincere prediction that within 4 years we'll say, actually, that kind of worked?
I believe that it's going to work. And I know that what we were doing wasn't working.
Yes.
So I think we have to try this. And I have a high confidence ratio it's going to work. And I have a very high confidence ratio. The good news is we have President Trump's previous term when everyone said none of this was going to work. Mm-hmm. Oh, the China tariffs are going to do this. They're going to cause inflation. They didn't. This is going to happen to working class. It's going to be bad for working class Americans. Well, guess what? Working class Americans, hourly workers did better than supervisory workers. The bottom 50% of households, their net worth increased faster than the top 10% of households. And look, I'm not happy with what's going on in the market today, but the distribution of equities across households, the top 10% of Americans own 88% of equities, 88% of the stock market. The next 40% owns 12% of the stock market. The bottom 50 has debt. They have credit card bills. They rent their homes. They have auto loans, and we've got to give them some relief. That I was struck by the statistic from last year.
That's the message right there. Just as a bystander, I'm like, wow, okay.
All right. Or that I like the examples, and I was really struck by two different statistics last year. Summer of 2024, Americans took more European vacations than they had in history. Summer of 2024, more Americans were using food banks than they ever have in history. I went into two food banks that near my hometown to ask, what's the story? And they said, it really takes, for a lot of people, it's a loss of dignity to walk in a food bank.
Of course.
But they were seeing a new phenomenon, that it wasn't their traditional clientele. It wasn't people who'd lost their homes. It wasn't people out on the street. These were working families who could no longer, $100 at the grocery store, that basket of groceries every week, they were missing 5, 6, 7 things, and they were coming to the food bank to top up. So that's not a great America. Record European vacation, record food banks. And no reason we can't keep the record European vacations going, but we got to take care of these other people. And you know what? That they don't want handouts. The Democrats had this strategy called compensate the loser. So first of all, the name of that strategy, I don't think the bottom 50% of Americans are losers. I think the system hasn't worked for them. I think that they are winners. It's just a bad system. So we are going to fix the system. And look, they want good jobs. They want their kids to do better than they do. They want to own a home. They want to pay down their debt. That this isn't hard. And I think that we can do this in the next 4 years.
It used to be only crazy people.
Man. Well, give us your thoughts before we hit the next segment.
I mean, it's just he's
Jack, give us
addressing
your thoughts too. W or
such
L?
core problems, man. These are such core problems. And yeah, I'm in crypto and I love you. I found crypto not through price. It's just to be able to communicate openly during flu season. And then price and the adoption has all been, amazing things that I've found in crypto over the years. But the real thing that I was going through in March of 2020 was I had 2 kids and, we were just about to have baby twins. And I realized that the cost of living was outpacing our ability to provide a truly awesome world for my kids. And so thank God for crypto and being able to do that and, getting into a home and then transferring out and getting to another low interest rate. Thank God. But he's addressing some of the most core issues that I think are some of the most relatable things people across the American Republic are feeling right now. And this is a painful thing to have to fix, but God, we are going to make, you have to break a couple eggs to make an omelet, as I say all the time. It's going to be painful.
Let me ask one more time for chat here.
Yeah.
W or L so far, Chad? W or L? I agree with everything he's saying, but I think it goes to Tucker's point as well. Just we don't know how this ends up. Scott Bessent can believe in it all as much as he wants, but we don't know what the necessary effect actually will be. We can't actually predict China's move. They can make assumptions and they can be playing 40, chess here, the best of their capabilities. But there's a lot of groundwork that needs to be done. But I love the 88% factor. That's something I've actually talked about a ton, which is the majority, 88% of your stock market is controlled by the top 1%, right? Or the top 10%. And then it drops dramatically. And it's that is the pivoted moment here and that's why Wall Street's been so against a lot of the tariffs, is because the banks don't like having to rely on the middle class for money. They're addicted to relying on the institution. They're addicted to relying on the government, this free handout, the free money. That's what Wall Street's been addicted to really since 2008. So what we need to go back is again, Reagan's administration in the 1970s, where the working class made up the majority of the wealth in the United States. And that's where we can kind of counterbalance the overall market conditions that will lead to economic prosperity. Of course, look at the 70s, the 80s, the 90s. Like we had economic prosperity. So it's cool to see that outlook. It's just gonna be interesting to see how this plays through. And I wish more people would be open to that conversation rather than just immediately label it as a negative or I mean, there's really no economic data points that aren't showing that what Scott Bessent is saying true either. Like some people are going to say the data doesn't say this. Well, the data shows the economy's strong, inflation's dropping, unemployment's rising. And then, of course, looking at manufacturing data. But the tariffs, by the way, the tariffs aren't even implemented yet, guys. So we won't see these effects for 6 months. Now, luckily, we have seen some arguably you have seen some effects in the sense that you've seen $6 trillion in investment allocated to the United States from Saudi Arabia, from manufacturers. You already see Vietnam and huge manufacturers saying, hey, let's open up these trade negotiations. And so there is immediate, chess pieces that are starting to move, but this is definitely a long game for the administration here. Very interesting. But let's move on here. We're about to hit the guys, really quick, if you haven't already, we haven't been doing this too much. If you guys can hit that like button for us, if you're on X, hit that repost button. But guys, take 2 seconds to give us a thumbs up for being live this entire day with you guys. We've been covering everything from the morning show, all your crypto news, all your charts, to Federal Reserve Chair Jerome Powell and their convention. And now we're breaking down this live breaking news with Tucker Carlson, of course, Scott Bessent with you guys. So if you guys appreciate this content and the moderation, just give us that like button. Even if you don't like us, even if you hate us, even if you disagree with us, hit that dislike button. So
we work hard for the haters even too, man.
It's
just like we are in a time frame where people are just calling for, I see a lot of comments like, how dare they talk about crypto and how dare you keep talking about this volatile asset class? Is because we live in an extremely volatile time frame. And right now, that's how I win. I lean into the danger and I keep winning. And I've won cycle over cycle. I'm going to keep doing it. I'm not going to give up on people that doubt hope, because I have hope. I'm here to spread that hope. So make sure, we work hard for you. And we have Isaac on the sticks here. He's over here, just
hey, looking clean, brother. Yeah. We respect everybody here, guys. And we even respect the people that, just like when we're at $3,000 Bitcoin and they told us we'd never go past 20K. It's like, we'll still be here. I'm sure you'll be back in 6 months. You won't apologize, but we'll still love you, baby. We're still American. Let's hit this though. Let's hit this.
We're very successful, lived in rich person world for a long time. While this was all going on, and I just have to ask you candidly, were you ever at dinner with people who are like, wow, we're doing great? I live in rich person world too. I'm not criticizing you at all, but like, did anyone at dinner ever say,
be right back,
wow, I just tried to drive somewhere for 100 miles. This country doesn't look good. Like, people are not thriving. Was there any sense of that among people you knew?
No, they were more, my net jet was an hour late.
So
I had the worst day. My net jet was an hour late. You can't believe, oh my God, I'm going to switch charter companies. So and look, Tucker, that I'm especially attuned to what I think's going on with the United States, because, I will tell you, my family was very affluent. Early settlers, we were very affluent for about 250 years. My dad made a lot of bad financial choices. So when I was born, first 6, 7, 8 years, we were affluent. He lost everything. And so I've seen what that's like. I've seen both sides.
Yes.
That I was fortunate enough to be able to make it back. And that, I know what economic insecurity is like. And I don't think people should have to have that, or if you want to work hard. Yeah. And people want to work hard. You were out on the campaign trail of President Trump. I was out on the campaign trail. And I got to say, so I went for the final 2 stops in Pittsburgh, Grand Rapids, Michigan. Pittsburgh, in the Duquesne Arena, walk in, and there are the union workers, the steel workers. They got on their hats, they got on their vests, they're with their children. And it's very moving. Like, they just want a better life. They want their communities to be sound. They want their kids to do better. They want Little League baseball. They don't care what's going on in Madison Avenue. They don't know what the hot new restaurant is in Paris. And that President Trump somehow has assembled this incredible coalition of Elon Musk, the richest man in the world, and those folks who were in the Rose Garden yesterday, and those people I saw at the Duquesne Arena, and I think it's unbelievable.
Interesting. What do you worry about as Treasury Secretary? Obviously, you probably like lying in bed at night thinking about all the things that go wrong with the U.S. economy. What are your, if you could be honest, like what are your biggest worries?
So to the extent that in my business career, I had a strong point, I think it was risk management. So I view myself two things: the United States leading bond salesman.
Yep.
And I think that with what's going on, I'm going to have a better and better story to tell as we're getting our economic house and our fiscal house in order. And then I try to imagine what could go very wrong. What would we do if there were another outbreak similar to COVID? You can't worry about things like that, but I worry about a kinetic war somewhere.
Yeah.
What would we do in the event of something that happened? And what I try to do is create the situation where I can worry a little less every day. So I'll tell you, I came in, I was confirmed on January 28th, and during the month of January, 10-year interest rates, which is probably the most important rate in the country, mortgages are based on that. Business and capital formation is based on that. I came in and that had almost spiked to 5%. And I think 5% can be an uncomfortable area for the economy, for Treasury, who has to issue a lot of bonds. And now that I've gotten in, I worry a little less, but I still worry. We've got a tremendous amount of debt to roll. And I worry that we aren't going to do the smart cuts and the focus on waste, fraud, and abuse. I worry that that gets sidelined. And then on the other side, I worry that the tax bill somehow gets bogged down. We could have the largest tax increase in history. Or, I worry that the normal geopolitical things, whether it's Iran, Taiwan, that something goes haywire between Russia and Ukraine.
So you began your job description by saying you're a bond salesman. You're selling America's debt to the world.
Yep.
And I know that was like a big part of the portfolio as the transition was envisioning it, like who can make the case for American bonds to the world? How will your case, are you confident you can do that? And how is your pitch changing after yesterday?
That's a good question.
Well, as I said, right now we're in this strange betwixt and between, because we are going to take in substantial tariff revenue. And what DOGE is doing is substantially cutting expenses, but we're not getting credit for it right now. But I think market's starting to get a hint of it. So the 10-year bond, having almost peaked at 5, is now through 4. Way to think about it is every basis point's about $1 billion in savings. So we've saved $100 billion. And that's probably not going to happen that quickly again. But I think that we are setting the sails for a much better fiscal time. And people don't have to say like the U.S. is out of control. The U.S. is going to default. That we're not. And I think every day my case gets better. And like if we were to just imagine a very reductionist formula for government, so G equals S minus T, spending minus taxes.
Right.
That for spending, our side, the Republicans, like to spend, but less than the Democrats, but both sides like to spend. And then minus T, Democrats like higher taxes, we like lower taxes. What if the S actually went down? And I think, to me, that's the exciting part, that's been unthinkable in everybody's calculation.
No one's even really seriously raised it, including Ronald Reagan, by the way.
Yeah. No. And look, I think President Reagan had a different agenda, that he ramped up defense spending. And remember, oh, he's crazy. It's this. It's going to break the budget. Star Wars is crazy. He's a madman. And then the Iron Curtain went down.
Yes.
And we were able to. So it's actually a Soviet term. And he used the Soviet strategy on the Russians, escalate to de-escalate.
Yes.
So he escalated military spending. They tried to keep up, and then they collapsed. So, again, everything's easy in hindsight. But I think here, what we're doing in terms of bringing down these incredible levels of spending, but more importantly, I tell anyone who'll listen, I said, remember, DOGE is the Office of Government Efficiency, not elimination, not extinction. So what if we can actually do a better job with less? Seems inconceivable, but when I see what's going on in a lot of these government agencies, it's unbelievable. And like, if you think, I've lived in Manhattan, I've lived in Florida. Roughly, state of New York, state of Florida have the same number of people. Actually, Florida has a few more now. So New York budget is about $235 billion. Florida budget's $125 billion. How do they do that? Oh yeah. And there's no income tax in Florida. Oh yeah. And the roads are better. And you go and get your driver's license and it takes 15 minutes, not 5 hours. So I think, can we make the rest of America look more like Florida and less like New York? Or one day, is New York going to look more like Florida?
So do you think after 4 years, we will see an actual net reduction in government spending thanks to DOGE?
Inflation adjusted, yes.
Huh. How long do you think Elon's in for?
I think that Elon, that day to day, I don't know, but I think his imprint is going to be with us a long time. And I think that the mainstream media has tried to demonize DOGE and all the folks who work with him. And I tell you, we have a couple at Treasury, a couple at IRS. They're Treasury employees who I hired, I interviewed. And I'll tell you, there's this one fellow, Tom Krause. He was on TV with Brett Baer the other night. And Tom's incredible. He's done $100 billion of tech mergers. With my investment business, I would have hired him. I don't think I could have afforded him. And he is doing this for the good of his country. He came in without touching any of the payment systems, that the mistruths that were spread by the Washington Post. He has analyzed the system, and within 6 weeks, pointed at all the vulnerabilities. There's a young man named Sam Kirkos who was on Laura Ingraham with me the other night, and that was my idea. It's like, let's bring him out of the shadows and let's make this demonization stop. And like, this young man, other than the fact he only owns one pair of pants, which he likes telling everyone, you or I would be happy if our daughter brought him home. He's a patriot. He's working hard for the country, and he's analytical. And the things that he's seen at the IRS, just in their tech systems, and that's all he does. Elon has a shirt that he wears under his jacket, and he'll flash it every once in a while, and it says tech support. And that's what we're getting, is we've got a blockbuster style government, and we should be on Netflix. We're hailing cabs, and we're in an Uber economy. Why can't the government be in the gig economy? Not hard.
So we're not positive if cryptocurrency is the future of finance, but we do know that what we have now is broken and dangerous. Debt has never been higher in this country. Many of our so-called leaders are getting rich, serving you. It's a scam.
I think that
it's easy to understand. itrustcapital.com or click the link below.
Can I ask you a weird question? Who runs the Federal Reserve exactly? I don't really, how can you have this like pivotal institution that obviously has like the most direct effect on markets of any, And it does seem outside of political control. What is that?
Well, look, I think that during my confirmation hearing, and I was actually at a dinner that Jerome Powell was at last night. At my confirmation hearing, I said, I'm only going to talk about the mistakes the Federal Reserve has made in the past. I won't talk about the ones they're going to make in the future, right? But I think it is important for monetary policy that they are walled off, that some of the other things they do, well, regulation, they got into DEI, they got into climate. I actually think that impinges on their monetary policy and makes them vulnerable. So I think that they should focus on monetary policy, doing the best that they can for the American economy, the American people, keeping inflation low. And then the rest, there are a lot of other banking agencies too.
So the Fed controls the weather now too? What were they doing with climate?
Well, I will tell you, there's something that the Treasury Secretary chairs something called the Financial Stability Oversight Council, and it's all the financial regulators. And I think it was 2 weeks before Silicon Valley Bank went under, FSOC issued a report. And guess what they said the biggest risk to the financial system was? Climate.
Really?
Not that there was a
So
large
dumb.
bank in California that was
So dumb.
having a slow motion run on its assets, and that it would cause another bank failure, then another bank failure. It was climate. So as far as I can see, climate's been pretty good. They failed. The regulators failed.
That's so
And I think that's what people are getting sick of. And it's back to one of my favorite phrases that President Trump uses, common sense.
Yes.
Look, it's just common sense that if you have a whole bunch of deposits that could leave your bank with a click, you shouldn't have all these long-term assets, but they were too busy worrying about the weather. And there was also some degree of regulatory capture. Seems hard to believe to the average citizen. The CEO of Silicon Valley Bank was on the board of the San Francisco Federal Reserve, who was his chief regulator. They're going to tell that guy what to do?
Mm-hmm.
Why is gold moving around the world in such huge quantities right now?
Well, a couple of things. It's moving. Physically, it's moving because of potential tariffs here. So, it was unclear whether we were going to exempt gold from tariffs, which I believe we have. So there was a big move out of vaults in Switzerland, out of vaults in London to get it into New York. And look, that there are a lot of different stores of value over time. Bitcoin's becoming a store of value. Gold has historically been a store of value. I think what's interesting is, where do we see the gold demand coming from? A huge amount is from China.
Yes.
Where they, as I said, they're in the middle of an economic recession/depression. People don't trust the Chinese currency because they have capital controls.
Mm-hmm.
There are 1.4 billion Chinese who all want to get their money out, and they won't let them. They will let them buy gold.
Mm-hmm. That's interesting.
So that's a response, you think. But it's just, do you find it interesting that even now, 2025, when everything is abstract and digital, that gold is still widely believed globally to be a reliable store of value?
I think that gold has a lot of history going with it.
Yeah.
That friend of mine's grandmother, during Russia had a financial crisis in 98. Then they had a big inflation. And a friend of mine's grandmother went out and bought 18 bicycles and put them in her apartment. And that was her store of value.
Yes.
So
How'd she do on the bike investment?
Great.
Yeah.
Great. I wish I did that well. So, but that, look, gold also has other applications, a lot of applications, jewelry in India, but it's something that historically people have all agreed on. And gold can't have a fiscal problem. Gold cannot have a gigantic budget deficit. Gold cannot have a war. So just the fact that it is this isolated thing makes it very interesting. And the fact that the entire global trading system, until Richard Nixon took us off, was tied to gold.
So you're not anti-gold?
Oh, no. When I had my fund, I think people might have called me a gold bug.
How did you wind up interacting with Zelensky?
President asked me to go to Kyiv. Well, he actually asked me to lead the economic agreement that was part of his peace plan. And I think it's important to look at the arc of President Trump's peace plan. And he had sequenced it really well. It was, we're going to sign a deal with Ukrainians, and it'll do several things. One, it will make the U.S. and Ukraine partners, so link us closer together. Two, it will be a symbol to Russian leadership that the U.S. isn't abandoning Ukraine. But importantly, three, it will show the American people that we have an economic stake and that we haven't just been doing these massive grants, which has been the history of U.S. aid.
Of course.
So Ukraine succeeds, we succeed, and it could be a long-term partnership. Now, I thought it was important to take the agreement to Kyiv and present it to President Zelensky. Everyone was telling me, oh no, having meet you in Vienna, he's going to be at the Munich Security Conference a few days later. I said, no, I want to go there and discuss it with him. And that's how I ended up going to Kyiv. Very, very interesting going to Kyiv, fly to Poland.
Yeah.
Then you get on, I don't know if you've been on it, get on this night train for 10 hours and you arrive at Kyiv at 8:30 in the morning. And for anyone who they said, oh, the President Trump selling out to the Russians, not selling out to the Russians bombed Kyiv 4 hours before I got there. They hadn't bombed since November. So the Russians didn't like the look of this deal because it thought that it was actually something durable for the U.S. people and the Ukrainian people.
So what happened?
President Zelensky was in the mood to sign the deal that day. We had a spirited discussion, and I said to him, you've got 50 reporters out there. I am here to show that there is no daylight between the American people, the Russian people, between, Ukrainian people, between the American leadership and Ukrainian leadership. And I said, you've opened up daylight size of the Grand Canyon. What are we going to go out and tell those people? He said, tell them I'm going to sign the deal in Munich. I said, so you're going to sign the deal when you see Vice President Vance and Secretary of State Rubio in Munich? Yes. He didn't sign it there. There's a lot of back and forth. The following week, they're begging to come to the White House. And
What's the war?
make him sign the deal before he comes. And then he got to the Oval Office and blew up what should have been the easiest thing to do in the world. He was supposed to show up, have a press conference. We were going to have a private lunch. If he had anything on his mind, there were going to be 9 of us, 9 of them in the White House dining room. He could have aired his grievances then. And there's a famous photo in the East Wing ballroom of everything laid out on the table to be signed. And it never got signed.
So this is an unelected president of a client state whose bureaucrats are being paid directly by American taxpayers, including their retirement accounts are funded by us.
And they have the lowest retirement age in Europe. It's 60. Put it in contrast, France is 62 and Italy's 67.
And we're paying for that. And so at a certain point, you wouldn't expect a man like that in a highly precarious position, I think it's fair to say, to
assume a high-handed tone with American officials and berate them and sniff a lot and say, just basically act like a crazy person. Like, how do you account for that? The arrogance.
So,
what is that?
I look, a couple of things is he was a performer, kind of a vaudevillian, and he was an ordinary person thrown into a fraught time, rose to the occasion.
Yes.
Was heroic.
Yes.
And I think is stuck. And I think under a tremendous amount of pressure, I think that some of the government officials around him and the cabinet are very good. I think some of the people around him, he's not getting the best advice, that his advisors are not perfect. And I think if we go back to the agreement, I think one of the great things about the agreement is it makes sure that the money comes to the American people and the Ukrainian people. Because, Tucker, let me tell you what the agreement wasn't. It wasn't one of these rapacious Chinese deals where it's sign over your mines, sign over your port, or it wasn't a loan to own. Here's a loan. You're never going to be able to pay it back. We're going to get this. It's a genuine economic partnership that they put in assets. We can put in loans from our overseas banks. We put in American know-how, and we don't make any money unless they make money. And you know who doesn't like that? People with their hand in the till.
Right.
Mhm.
Because we were regulating the flow of the money. So I think that's part of the glitch. I am hopeful that it was a bug, not a feature of the system, and that's been fixed. We're expecting a Ukrainian technical team beginning of next week, and I'm hopeful we can get this thing signed and go back to a win-win situation. Because President Trump, I didn't give you the full arc of the deal. President Trump wanted to create this deal with the Ukrainians, then be able to go to Russian leadership and show them that we do stand with the Ukrainians, but on an economic basis. And then the Russians would be incentivized to come to the table also. And so that the sequencing has been thrown off, but I think we can fix it.
Are we ever going to get an audit of where all of our billions went, where all the weapons we sent, what happened to all the cash, all the pallets of $100 bills? Like, where are they now? Why is it hard to get an audit of what happened to the money?
I don't know. Tucker, in my life, I always try to look forward.
Yes.
And I think if this deal works, then that money could end up being small change.
Yes.
A good way to think about it, when the Iron Curtain came down, Ukraine and Poland's economies were roughly the same size. Poland is 3.5 or 4 times larger now.
Yes.
Poland is going to have one of the highest per capita GDPs in the world, higher than some Western European countries.
For sure.
Ukraine, to your point, because of various kleptocracy aspects, has been held back.
Yes.
So hopefully with U.S. assistance and President Trump engineering this peace deal, Ukrainian people can have a better future.
For a Treasury Secretary, you're a very capable diplomat, I must say, very diplomatic language. Last question. How do you, so because this is also, and you're just going back to the tariff announcement yesterday, and because it's like, it really is a total departure from what all of us have grown up with and our expectations, and however much you support it, it's like, it's new. Mm-hmm. And people are freaked out about it. How do you keep message discipline in an administration, in any administration, and this one specifically? How do you decide how you're going to explain this? Who's going to explain it? How do you keep messages from contradicting one another? What is that process like?
We all take President Trump's lead.
Yeah.
We know we had a meeting yesterday morning. We had a meeting after the announcement in the Rose Garden before we went out doing media. And he, as you know, he's his own best spokesman.
Yes.
Nobody can do it better. And then we fan out, and we are all unified behind this and his vision. That's why we're here. If you didn't want to be part of it, shouldn't be here.
But do you ever say, like, maybe this is someone who can reassure potential bond buyers, investors in markets? This person scares the crap out of markets. Like, let's get the guy who reassures markets.
Well, the one thing I will say, that no one should listen to anyone in the markets talk about the US dollar other than President Trump or myself. We're the only ones who speak for this administration, the United States government, on dollar policy. I can tell you, we have a strong dollar policy, and we're putting in all of the necessary ingredients to make sure the dollar is strong over the long run. Can it go up and down, on a Bloomberg terminal over the short run? Sure. Can individual bilateral moves happen between the dollar and the Mexican currency, the dollar and the yen? Sure. That's what I made my living doing. I'm glad it does it. But over time, if we put in solid economic fundamentals and do this transformative program, then the dollar is going to do great, and the American people are going to do great.
Secretary, thank you very much.
Thank you.
Appreciate it.
That's a lot of it. What the hell is that? The $350 billion is small? That's kind of weird.
Yeah, I got a few to take. I retweeted and was clipping some of the most important parts. I think probably the most important statement, I mean, there's a few, obviously. There's the Bitcoin one. Was definitely this one right here, which is where he pretty much came out and said, a lot of our trading partners, including some of our allies, have not been good partners. If tariffs are so bad, why do they have them? Or if the American consumer is going to pay all the tariffs, why do they care about the tariffs? And then I followed by Democrats refuse to answer these questions. I wish we could have people join us on here that just disagree with these tariffs, because I want them to answer. They need to answer this question. It's like, for the people that think they're like, oh, we're just cult leaders. Okay, well, one, dude, Donald Trump's your president. This is your U.S. treasurer. Suck it up. You got 4 years to deal with it. We're literally objectively taking in the data, the information, and trying to analyze, what's the most likely outcome of these market conditions. And I don't know why they can't answer this question. They can't answer. If tariffs are so bad, why do they have them? Why have tariffs worked throughout history? Why did they work on China in the 2016 or in Trump's first presidency? And if American consumers are the ones that are going to pay the entire tariff, why do they care about the tariffs? Right? So, why won't you guys answer that question? I want to know to the people in chat that are answer the question. Why do they care about tariffs if American consumers are going to be the ones that pay all of the price? And they just can't. And this is where, Scott Bessent was very clear on this. Their focus is keeping a strong dollar. It's bringing down inflation. It's at the same time as bringing back manufacturing. It's everything we kind of been discussing here. It's good to see that outline here, but we just don't know what the volatility is it's going to be volatile. It's going to be volatile over the course of the next few weeks.
That was the post I put up last night. It's like, we're kind of, it was in reference to a scalp trade, but then right after I was like, I've been saying collapse now and beat the rush, is because I knew that being interconnected on a global scale as we are currently, and then now we see America nationalizing production, bringing all that stuff back, it's going to get crazy. It's going to get crazy. Oh my God. Schlongen.
It's pretty, and it's not all, because I have a lot of Democratic friends, and I like a lot of Democrats. I think it's just far right and far left are kind of the loudest individuals. But yeah, it just, I'm very that's why I keep saying I'm very optimistic on the outlook of this. I saw people in the comments being like, Trump's he doesn't know what he's doing. He's dude, Adam Schiff. I hate this freaking Congress official. He's literally one of the dumbest people in his position of power, and he's very corrupted. But coming out and saying he's like, Trump's literally tariffing penguins. Like they're using it as political clickbait to drive views and aggression, to benefit and further benefit their donors and
the memes are great though. Have you seen the memes?
They're great memes, but it's like when your congressmen are the ones using that for political, like radical clickbait, and then not going, oh no, wait, no, the Norfolk Island, like all those islands are territories for other countries, and the reason why they're tariffing them is so that way they don't found any loopholes or use any countermeasures to the tariffs that are being in place. Like there's an actual strategy to that. But now let's not talk about that. Instead, it's but not to say the Republicans will do it, dude. They're eating the cats, they're eating the dogs. You kidding me? Both sides definitely do it. But if you want to actually like constructively analyze these market conditions and try to be as objective as possible, you got to eliminate that noise, dude. You got to you have to take Scott Bessent at his word. What is he going to try to do? He's going to try to support the value of the dollar. He's going to try to drive down the 10-year yield. That's going to be what affects most of your mortgages and your debt payments on a 10-year spectrum. And that's what's effectively preventing certain hiring sprees or manufacturing points that they want to see grow. So it's not like I feel like I don't understand why it's crazy to listen to the U.S. Treasury and go, okay, well, this is their plan. Let's study that. But no, you're
Yeah.
met with racism and
Well, dude,
and
and like,
screaming.
there's, people politically are in max fear if they're on the other camp, but people in crypto are in max fear. There's a lot of people that are trying to call this a top and are really giving up. And this is the time where you can literally create generational wealth by just leaning into it. We're in an overall bull market. We have institutional adoption. We have the Secretary of the Treasury calling Bitcoin a store value. We have the heads of BlackRock calling it digital gold. And now we have people around me, or not necessarily around me, but just I've seen some comments, some posts about people literally giving up at the worst time possible to give up. I got to emphasize that that is my opinion on where we're at in the markets. This is a different market, and make sure that you're investing in things of value. I don't think that all of those meme coins that are down 90%, I don't think a bunch of them are coming back, but we are seeing new ones, right? That are, doing good. And they're kind of the canary in the coal mine. People are always out there messing around. The fear index that you showed, Josh, 24. And we have, we don't end bull markets in max fear. We end it in euphoria where people are bragging about $2 million NFTs.
And guess what? When we're at 80 greed again, they're going to keep saying it's going to go higher. Go higher.
Yeah.
And it's
it is.
yeah, it goes back and forth, and I think people just need to realize, the Wall Street got it wrong. They've been, feeding off countless debt and money printing from the US government and be completely reliant on that artificial printer. And we have to releverage that private sector. And so I'm not at all a bear. I'm not at all as bullish though as a lot of people are. There's a lot of people that are pricing in like, crazy upside. I think it's going to be more stagnated. I think it's going to be stair steps up. Because of the economic data, it's going to be a slow rollout. But like Scott Bessent said here, is markets are going to start to realize that and start factoring in. And I think that's going to happen sometime with really by June. June's still my date on the pivot. June's still my date on the Fed's coming. Oh, hey, our inflation's dropping, but unemployment's rising. We need to cut these interest rates. And so you have a very limited time here to see that downside. And I told all of you guys in February, I don't change, my analysis will change here and there, but it doesn't really change that much. And since February, the bottom has to happen sometime between mid-March and mid-April, because once that economic data comes in, unless the CPI report magically ticks up worse than expected on April, which I don't expect. When you're looking at grocery prices, you listen to the Agricultural Committee, the Commodities Exchange Commission, they're very confident in the lowering costs. Look at orange juice, literally just look at your commodities across the spectrum. Oil's plummeted. I don't think that's going to come out negatively. So if that comes out at all, even as expected, the downside that you're playing, I mean, the SPX is different, right? The SPX is different here. The SPX is bleeding a little bit more, but we're obviously a crypto channel here. And still, even on the SPX, like just zoom out, right? Like people that are bitching over their 401ks, dude, most of you aren't even retiring for another 30 years.
Well, most
or maybe
of them
10
are
years. And there will be people, most of them are ETFs, 100%. So that's going to rotate over. But like these are corrections are normal. It's not like we haven't dealt with correction. And like, again, this looks bad. This is 20%. But look at the correction here. This is COVID. COVID was a 33%. The Biden administration, it was down 30% for 2 years. But you guys bitching over your 401k for 2 years under Biden's economy, Biden and Kamala Harris, which people are now starting to come out. I made this post right now a few moments ago. This was cracking me up. 23 Nobel Prize winning economists call Harris' economic plan vastly superior to Trump's. I titled this "Same Vibes as 51 intelligence officers say Hunter Biden's laptop is a conspiracy." It's just use your historical data and look at what happens every single time, right? What do you notice about every single crash? The recovery is almost just as quick. Every single crash, except Biden's. Of course, it took 2 years to get out of that shithole. And this is because of the Inflation Reduction Act and energy. And anybody that has studied the Inflation Reduction Act, probably the worst. It was the Inflation Cause Act, is what that should have called. They literally had to revoke all of their environmental policies. They had to revoke all of the Trump fiscal or the energy policies that they embedded, that they revoked. They had to start putting back into play. What matters is the energy. And so, again, I just think now that we're down to these levels, guys, whether you leave politics aside, we're down 20%. Bitcoin's down 20%. Holding way better than the XPX. Your altcoins are down 60, 70%, 90%, and some of your lower caps, even 95%. Unless you're holding Plume. Shout out to anybody that got into Plume. I called it direct.
Dude, I
Dude,
have been
9
loving
cents,
it.
baby. 9
I
cents.
know.
I called the exact bot. This was a
Did you get
fucking
some?
beautiful. Yeah, I have a little bit of Plume. I don't
Good,
have.
good.
I only bought $1,000 worth, so I don't have like.
Yeah.
I don't have much.
Just
But
a little
it's
bit is good though. I mean, because
I
it's
buy-
like it's
Go ahead.
part of the Ondo ecosystem. I know it's part of the RWA process, and like Bloom was looking pretty good. Like this is why, generally I'm not worried at all. I'm still up big time on Chainlink, but like adding to Plume, I think adding to Morpho, at the end of the stream, I'm gonna be buying some crypto. And I'm stuck between maybe adding to Aerodrome at 36 cents or just, I don't know. Isaac is shaking his head. Yes. You bought
goes,
Aerodrome?
why won't I really don't care about the Epstein files, guys. I would love to get them released, but they're probably just not going to get released.
We're never going to get those.
We're never going to
It's
get them.
aggravating.
And that has
It's
nothing to do with the economy. So
No.
if that's your reason, I can name another 100 reasons. Borders are closed, down 95%, better than ever. Gas is down, groceries are down. But yeah, you can start you gotta move the goalposts a little bit further, and then a little bit further, and then once those goalposts get moved, feel free, move them a little bit further, and then once those move again, make sure you move them a little bit further as well. But yeah, no, we got JFK files, dude. I want 9/11 files. I want all that stuff. But
you know what I want? I want the Vegas files.
Yeah.
Okay. I want the Vegas.
And I'm telling you right now, the reason why the JFK and 9/11 won't is because there's still people in positions of power that would have to be held accountable. Most people involved in JFK are either dead or ancient and brain dead. So it's much deeper than one or two people. It's a very complex dark web of corrupted organizations and a criminal organization, like a financial criminal organization. You guys just got to realize the reality of that. And it's unfortunate, man. We all want that truth, but it's the same. It's just not going to get solved. I mean, maybe they pull something out, but I am not optimistic that we're going to get all of those files, unfortunately.
Yeah. Well, I mean, on the SPX, I think, am I crazy? Am I seeing a gap we created at like 5,300? It's basically between like 5,300, 5,400.
There's huge gaps, bigger gaps than ever.
But like, I could see us probably finding that bounce point right here in this kind of little shelf spot here. So
I just want to shout out Bob real quick. Bob, why didn't Biden release the files? Why didn't Kamala Harris release the files? Yeah. So, anyways, moving forward. But yeah, there's a huge gap. There's tons of gaps. A lot of bullish metrics here. Yeah. What's interesting is going to be, the weekly just looks so good, dude. I mean, on the daily, even the daily, the Stochastic overextended. We could still have that upside. It's that 200-day moving average. If we can get above that here, I think you're going to see some significant upside. And it's look at this 73 trend. Like, right, we close below it, but there's a 73-day trend line here. We went through it really quick. If we can close above this trend line, guys, like that upside is going to be absolutely ridiculous.
Yeah.
And I think you're going to see some massive gains. The 4-hour though looking extremely good as well. Look at the 4-hour MACD wants to roll over. Stochastic, plenty of room to go. Dude, the Bitcoin is holding, bro. Dude,
I know.
The stock market's down 5%. This is like the worst day in history.
It's incredible.
It's one of the worst days in stock market history, and Bitcoin's like, we're chilling.
Yeah. That's a great sign, honestly. Like, I know there's a lot of worry out there, but like, I'm kind of like chilling here. Like, and this is like, I have an opposite mindset, I guess, than the retail folks, I guess you call me. I'm like a middle class dude, so I'm totally retail, but it's just like I approach it differently. It's like I buy big on these painful days. And I understand there's people that are out there that won't be interested in calling this a bull market until we reclaim about the $90,000 realm. Fine. If that's your thing and you don't buy until there's confluence, good for you. I lean into danger. I buy the blood. Ends up usually working out for me.
I doubt they'll buy at 90K. And then I doubt they'll buy at 100K. And then they'll slowly start buying. Dude, you remember this is some parts of me wish I could just come out and there's no point to spread hate like that, but I could speak in regards in vagueness. It's like, dude, I was watching some of the favorite creators I follow, dude, sell at 15K. They
Mhm.
didn't buy. I know for a fact, and I've managed and marketed for these not marketed, but I've managed their KOL groups. I used to sell
Mhm.
for them. I've sold for a lot of creators that told their audiences to sell at 15K, sell at 30K, and they didn't buy. They had no money. They had no money, and I know they weren't buying in. And then by the time they're at 50K and at 60K, they were telling you that they were buying the entire dip. And it's like, that's the hardships of this. Is there's very few channels out there that are here every single day that will admit when they're wrong, that will reanalyze market conditions, that will keep posting despite markets being down or up.
Mhm.
And it's just, those are the ones. It's Warren Buffett's famous words: time in the market always beats timing in the market. And I've learned that through just being in the cycles for multiple cycles at this point. Like when I was at 3K Bitcoin and $200 Ethereum, when XRP was at 7 cents, when Polygon Matic was under a penny, when Crow was a penny, like when Decentraland Mana was a penny, and I saw 100 X's. The entire cycles, guys, like we would go up. People would be telling me it's a scam, it's a scam, it's gonna crash again, and then it'd crash. They'd be like, I told you so. Then I'd keep buying, They're like, it's a scam, it's a scam, it's a scam. Then go up and pump, 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 pump. And then all of a sudden, 2017 we went to 2021. Although some people that were saying it was a scam that could have bought in at 3K, could have been at 5K, could have bought at 12K, could have bought at 20K, could have bought at 40K. Now they're asking me at $64,000, hey Josh, is it a good time to still buy in?
Right.
And and I don't judge people for that. We live in it's a capitalist market. There's a lot of information out there. And when I first came, I'm not a good, I wasn't a good investor when I came into this market. I immediately bought crypto, bought in 2018, heavy 2019, 2020 hit. I watched my 30-cent XRP collapse to 7 cents, and I thought I was an idiot. I kept buying, right? It just goes to show, and this is why dead people and the people that buy and forget about their assets are the best investors on the planet. This is coming from Fidelity. This is coming from BlackRock. This is coming from Vanguard. This is coming from State Street. The best investors are the ones that hodl. And as long as you're building and investing into those, building a portfolio that is built around those fundamental blue chips like Bitcoin, in my opinion, Ethereum, Link, Ondo. I think, and there's tons of other blue chips as well, XRP, Cardano, whatever you want to expect. I think the upside in the long term here in 5 years is up. And if you
Mhm.
don't believe that, why are you investing? Okay, don't come out
Absolutely.
here and try to jump between investor and
Absolutely.
trader. You can trade and scalp and do whatever you want. But
Right.
there's a reason why traders aren't better investors than dead people, because they over emotionally react to markets, and their upside, they could be profitable. Don't get me wrong. I'm just saying in comparison in
Well,
the long game. So
that's like
just take that
sitting
into
on your
consideration.
hands. Like sitting on
Yeah.
your hands can be more effective than scalping. Oftentimes, you know what I mean. There's a reason why exchanges make so much money. It's because people are emotional, and
Yep.
they're. You kind of got to flip your mindset when it comes to it. So, honestly, I'm feeling pretty good about this. People are asking what I'm going to actually buy. Oh, I got to whittle it down right now. I may as well. Let's look here. Let's look, because I'm going to be doing. I have to buy this. If I ain't buying, I'm
Now, what
dying
are
right
you
now.
buying? I want to know what chat's buying too. Let us know what altcoins your guys are buying.
Yeah, I'm gonna
Um,
go to my watch list. Let's see. This is basically my folio here. God, it's so funny. Plume's up by 6% today, 10% almost on the week. Plume.
what else is up?
Um, Morpho is at $1.15. That is delicious looking. Ondo is still like 82 cents. It's incredible how well Ondo has held up, honestly. Like on the week,
And
it's only
Link.
down by 1%. Absolutely
Chainlink's the other
ridiculous.
one I would watch.
Yeah, maybe I get more Link. You know what? I just want to buy the worst performance of this. I want to buy this. I want to buy this full price reset. It's
Aerodrome's
like,
another one. Aerodrome is like,
yeah,
man, 36-cent Aerodrome is kind of crazy.
because the majority of the bag is built at like 18 cents, but then I topped it off at 50 cents twice here, and then again 50 cents recently. But seeing this pullback to 35 cents, I mean, honestly, I'm absolutely taking advantage of this. I think that I'm going to be I think I'm gonna move into this because I still am of the opinion, and kind of what you're saying about the Ethereum RWA longevity, the new breadth of longevity, and how Ethereum holds up that top end might play it in. God, my pops is saying Link though. I do have. This is a tough choice. This is a tough choice when I'm having this bad of FOMO, but yeah, I mean it's basically between. I like Link a lot. I really like Ondo. I think the arena, these AVAX ecosystems are really beat down too. Um, Yeah, I might have to. God, he's bringing it up. Chainlink too, $13.
Mhm.
Um, yeah, and honestly, like Link is looking pretty damn good. Just if you're really zoomed out on this thing and seeing its overall price performance, like this is actually a really, really good dip. So that's a tough call. That's a tough call. I don't know. I mean, my average buy on Link is like 390, so I'd be upping it to about $4.50 maybe if I did a bigger buy right now. But yeah, man, this is what it is. It's just this is where you can build your portfolio bigger than you thought you would have been when the market was really pumping. I'll make this smaller here so it kind of fits in. This
Yeah.
is like you had the aggravation up here, right? People are asking me like, F, man, when am I going to be able to get into Link? It's already at 20, $30.
Yeah.
Now, right? Now. These are
Now's
the
the
times.
time. Now's the time.
Now's
It's
the
like,
time.
yeah. So I think it's great DCA, guys. But you know, on that note, guys, it's been an absolute phenomenal stream here. We've been live for over 4 hours here with you guys, giving you all
Have
the
we
coverage
really?
today.
God
It is
dang.
Friday. It is Friday. So I think that's going to be all you really see in the markets here moving over the
Yep.
weekend. Remember that at 4 p.m., we're now an hour away from close. So if Bitcoin pumps over the weekend, you are going to create a futures gap. So don't get too excited. We'd love to see sideways action. Or in fact, I'd love to see a dump in the weekend because then we'd have a nice bullish futures gap above us. So, you know, we'll keep you guys up to date on everything else. Of course, we got the Telegram. We got us on X. You got the Blockchain Basement. You guys make sure you give them a follow here. But if you got anything you want to leave off with here, guys, absolute W's today, guys. Thank you for being here and just watching and spending the day with us. Hit that like button on your way out. Drew, I'm handing it off to you.
Yeah, man. I mean, stay posted. Next week, we're going to have a very unexpected guest. Actually, a few unexpected guests, but one, it's going to blow your mind. Coming into the basement, it's going to be huge. Make sure you're subscribed to Discover Crypto, Blockchain Basement. If you don't hold your crypto on cold storage, you ain't doing it right. Use the codes in our description for an Arculus cold storage device. It's very easy to use. And if you're out there riding the lightning on these trades with me, use the link in our description for LBank. We got a great deal going on there. And love and appreciate all of you. I know that the times are scary, but really we're in the change of monetary policy and of macroeconomics that I could have only dreamed of 5 years ago in crypto. It's right on our doorstep. It's literally at our feet. All the pieces are in front of us. It's just up to us to act. So I hope you go out there and touch some grass as well in terms of acting. But love and appreciate every single one of you out there. And thanks for joining us on the show today.
Thank you guys for watching. We'll
Yeah,
see
absolutely.
you